Let's run it up. So, yo, what is up for everyone watching this on the YouTube replay? Hope you're. Oh wait, hopefully the audio is working. Okay, it is working. Perfect. Uh oh, I almost freaked out for a second. Hey, but yo, I have a a lot of interesting stocks to share with you guys. A lot of crazy updates. A few stocks I want to share with you that I think you should maybe watch now, put on the watch list. But this company specifically that we own in here, we don't really talk about it much because they're not too popular. But this is Coca-Cola Consolidated, and I've never seen this ever as my whole time in the market. But this company on Friday, I've never seen this before, bought back 22% of the entire company on Friday. So that was pretty crazy. They literally bought back 22% of all the actually here I'll show you what happened here. If we go to the shareholders right here, if we look at the largest shareholder, it's the Coca-Cola company. The Coca-Cola Consolidated company just bought all the shares from the Coca-Cola company, and it was because it was to get out of like a regulation bias point of view, because the Coca-Cola company has a board seat on the Coca-Cola Consolidated board of directors, and there was like it was influencing all their decisions to have the Coca-Cola company right on their board and whatnot. So anywho, I'm so they announced this after the market closed on Friday. So literally what's going to happen is this EPS number right here. If the so in the future, if the net income goes up 1%, this EPS is just going to go up 22%, even if the net income only goes up 1%. So that's a crazy update from the Coca-Cola company. There's a few other stocks I'm going to share with you that I think are potential good ones to look into. You know, there's Sezzle. There's also ticker symbol Dave right here. I didn't realize this. Hey, what up, Aaron? What up, Looney? Good to see y'all. And Isaiah, no way. What's up, dude? So this is ticker symbol Dave. If you kind of look in the middle left, the forward PE. Dave only trades at 19 times net income after all of this crazy stock price appreciation. This is why I think this stock is going to maybe continue to climb higher. I did sell some shares back here. Oh, sorry, I'm a little sick right now, but there we go. Yeah, Coke is better than Coca-Cola Consolidated, or I mean, other way around. I agree there. But yeah, Dave looks really interesting right now. Iron Mountain as well reported earnings. They had some actually pretty good numbers. Actually, let me go over this company right here. If you're looking for a kind of higher yielding stock, if you look in the middle, this company has a 3.3% dividend. And I do actually own them in my Roth IRA. Oh, I forgot to do a portfolio update. Yo, we'll do a portfolio update in a minute here. Also, we're going to be doing another 3-hour live stream later tonight at 8 p.m. if y'all want to hit the follow button. Hey, Isaiah, we'll check out that stock in a minute here. Good to see y'all. What up, Lulu? What up, Dan? So check this out right here. We do on Iron Mountain. We got 11 shares. We're up 5.5% on this company. This is actually a REIT, a real estate investment trust. And those are the kind of companies that actually have to, by law, pay out most of their earnings in the form of a dividend by law. So check this out right here. Here's what I love about Iron Mountain, why I think they're going to be one of the growthiest REITs out there. They have this data center business right here, and the global data center business has been booming. Like, check out these year-over-year comps. It's up 33% after it grew 20, after it grew 15, after it grew 36. Like, it just hits a new record every year, every quarter. And you know, data centers, that's a popular industry to be into right now. Also, their corporate and other side, that's up 40. Like, these year-over-year growth rates are insane. That's why this has actually been the best performing REIT, I think, out there. And this chart right here doesn't even include the 3.3% dividend. It's had a massive little jump up. So if you're looking for a little bit of a higher yielding name, check out that one. And there's some tailwinds from being in the AI data center industry. So yeah, let me give you a quick portfolio update because I forgot to do that real quick. So here's our Weeble account. Oh, well, hopefully it doesn't show the password here. Let me log in. This is known as our risk on account. We're open in profit and loss. We're up 17% all time. Not great. To be honest with you, we've definitely underperformed. But yeah, these are all the stocks that we own in here. We have some winners and some losers in here, like Sprouts Farmers Market's really been struggling. I like Progressive here as well. Axon's down 15. We saw that one coming because of how freaking overvalued they were. But we do have a bunch of winners. Like when we were speaking to Dave earlier, I do own Dave. Oh, I have another new stock I want to share with you. So actually, I just made a whole YouTube video about this, and if you want to see more about why I bought this stock, check out my most recent YouTube video. I'm going to get paid next week, and I almost promise I'm going to buy a couple hundred more of this stock. But this is ticker symbol BULL, Weeble right here. I can't wait to tell you my bull thesis. I have a pretty good one, I think. So this is ticker symbol BULL. This is a brokerage, and they're pretty much at it. They IPO'd it literally a half a year ago, but they're at an all-time low since their IPO. So if you like buying stocks in a dip, maybe check them out. But here's why I think, you know, I like them from a fundamental point of view, and I own $50 in them, but I plan to add more. But this is their brokerage right here. I've had a brokerage in them for many years, and they just introduced to this app right here the prediction market, and this is what I think is going to make them a boatload of money. Like they literally just added this, and also if you kind of look in the top middle, it says crypto, and it says new next to it. They also just added crypto back to the Weeble app, and that's what I think is going to print the money. Because on Robinhood, and Robinhood right here, and any brokerage for this matter, whenever you go buy or sell a stock on a brokerage, they make like a fraction of a penny or something. But whenever you go do this, whenever you go do crypto transactions or like this prediction market stuff, they're making a juice of a margin of a commission of a fee basically whenever you do that. So that's why I think Weeble, ticker symbol Bull stock, should do interesting. And let me share with you this as well. Here's ticker symbol Bull on Weeble right here. I just think this growth is going to be even higher. Like if we go to the revenue's already up 45% year over year. I think it's just going to continue to grow. Again, they just IPO'd. They're not really net income positive yet, but they're interesting, and I like their app here, their brokerage here. So okay, let's look at some other stocks here. Hey, what up, Ryan? He says, SoFi at 25. Hey, yeah. Let's see. Oh yeah, BYRN. I want to check this one out. BYRN. So this is um Binera Technology. I'm probably messing up that name here, but let's check them out. They're a very small company. If you look in the top right, they're only worth $419 million, but they trade at 27 times PE, which means they are net income positive. Yeah, they trade at 27 PE. What are their sales right here? So this is good. Revenue's up 35 after it grew 190. So they're on a nice streak of growth, but more importantly is the net income they're making. Because remember, I don't love these kind of market caps out there. They're on my watch list as well. But they're worth 419 million. Okay, they're worth 419 million. I normally don't like these kind of companies, but out of all the 400 million dollar companies out there, I want to buy the one that's actually making net income every quarter and that's actually profitable already, even though they're pretty small. So that's interesting. It must be a biotherapeutics company. They have a good balance sheet as well. Looks like no net debt. That's a really good balance sheet. Oh no, they're in the aerospace and defense industry. Oh yeah, they sell. Oh. I remember what they sell. I can't talk about it here, but they're interesting. From a financial point of view, those are good numbers. Those are good numbers. Why did GRMN drop 25% in a month? Well, let's check it out. Let's go figure out why. And looks like they reported earnings on this day, the exact day they gapped down the majority. It was the day they reported earnings. Let's go figure out what happened here. And actually, let's see what this app tells us. Oh, okay, there is no AI earnings review. What's this company worth? They're a $38 billion company. They're trading at 24 times PE, so they're trading at 24 times net income. Oh, so they're in fitness, outdoor, marine, aviation. So I like how diversified that they are. They're in a lot of different industries. So 50% of the revenue or less comes from the US. Wait, let me check out their website right here, Garmin. It's like it's like a... That's their website that's linked. Wait, their country is Switzerland. So this is a Switzerland company. It's not a US company. It looks like maybe some they sell fitness products, outdoor products. So it looks like some kind of Amazon kind of store. They're making good net income. Check that out actually. 400 million plus of after-tax net income a quarter. Really good balance sheet. Actually, these are good numbers. Maybe it's just the industry right now. I know the consumer's a bit strained or consumers hurt right now, but they're interesting. There certainly are. All right. Let's see. Hey, what up, Caden? Good to see you, man. Tommy said XEL. Yeah, remind me. Pen is interesting. Wait, XEL. Okay, this is Excel Energy. Let's do it. Hey, what up, New York? We'll check these out. So Excel Energy, they're at an all-time high. A lot of the utility companies are at all-time highs now just because of the power demand. And they're able to raise they now have a justifiable reason they can tell the government to raise their prices again. These are regulated. So a lot of these are regulated utilities and they have to literally get government approval to raise the prices. And right now, a lot of the companies are getting approval because they're like, hey, these data centers are stealing all our supply or demand. Anywho, so yeah, they're making good net income, pretty much 500 million net income a quarter. You get a sustainable, basically 3% dividend that grows every year. You can just buy the whole utility industry by buying ticker symbol VPU, and this doesn't even include the dividend. This is and I own some of these, or I own Constellation Energy. It's the second largest holding in here. But yeah, all these are good. Oh, there's Excel Energy. It's 3.11% of the ETF. There you go. So yeah. All right. So PENN. Has anyone heard of Barstool Studio, or like the One Bite Pizza by Dave Portnoy? They took us. They I think they bought them. The stock, unfortunately, has just not done too well. They're also that's just one part of their business. They're also in the gaming industry, we'll call it. We can't really talk about what exact industry this is. So, a little hotel business as well. Food and beverage. Let's see how that revenue's doing. That's up to a record. But let's check out their main business, the gaming revenue. Single digit growth. They're 2.66% growth. You know, we'll call them the Vegas stocks are kind of struggling right now, except some of them like BYD. But yeah, revenue. This probably explains it. The slowdown in the revenue growth. The revenue's only up 4% after only grew 1%, and looks like they just took a big hit to the well, they had a little they didn't actually lose that much money, but the core business did fall 28%. They only made 48 mil out of profits. Like, not great. I don't know about this one. Nothing really blows me away here. I'd be careful with that one. Hey, what up, Seuss? What up, William? Thoughts on Fiserv after the recent dump? So yeah, they do apparently like 40,000 transactions like an hour. This company does. Let's see, what was the news here? Every metric missed on expectations by far is what I remember. Yeah, check this out. So again, the orange line is what the analysts expect. Usually, just looking at what they reported versus what the analysts expected explains why the stock does so bad. And honestly, this company might be fairly priced right now. They're trading at 9 times net income, or basically 10 times PE. That might actually be fair for how bad this company is doing at 10 times multiple. But check this out. Big miss on revenue. They expected 5.35. They only reported 4.9. Big miss on revenue. A big miss on EPS, which is net income. They expected $2. They only did $1.50. And EBITDA as well. They expected 2.17. They did 1.8. So it really was a triple miss. They're still making good net income. They're still making 800 to $1 billion of after-tax net income a quarter. But it was a big miss versus what the analysts expected. Let's see if Moomoo tells me anything here. Operating margin decreased 3.4%. Higher technology merchant revenue increased 5%. Oh yeah, they own Clover, the Clover thing. Like a lot of restaurants use Fiserv. Anyway, they're interesting. I probably wouldn't have it as a meaningful size position. Oh yeah, hey, by the way, this is a brokerage right here. Someone's asking. Yeah, this is where you buy stocks on. If you wanted to get this brokerage, it's in the link tree in my bio, the very first link there. Brokerage called Moomoo. All right, so it's an affiliate link too, full disclosure. All right, so if you go like deposit $100, we'll both get some free stocks. Let's see. New York said check out RDVT. Let's do it. RDVT. So this is Red Violet. Hey, look at them. They're at an all-time high. Wait, is that yeah, that's an actual all-time high on this company. So hey, congrats if you're on this one. Hey, remind me to look at Duolingo. Yeah, we'll get to Duolingo in a minute here. So let's check this out right here. Red Violet. They just started paying a dividend, it looks like, or maybe it was a special dividend or something like that. Yeah, it was a one-time special dividend, looking back at the chart. So Identity and Information Solutions, that sounds niche, and they've been growing very nicely. Revenue's up 15 after it grew 29, after it grew 17, after it grew 25. So they're on a streak of growth. Yeah, beating on every expectation here. Are they net income positive? Those are good margins then. Whoa. So yeah, 85% gross margins, and they're already double-digit net margins. So the revenue was 23 million. Out of that, 4.2 million of it was net income. Yeah, that was real as well. That's after paying like 800K of taxes. That's a good balance sheet as well. So actually, that they probably paid more taxes than that, but they also made interest on their cash. So you know what? Let's go verify. Here's how we checked. They have 45 million of cash. And if you go to the income statement, we can see they made 380K of interest. And again, the operating profit doesn't include the taxes or interest that they made, and the net income does, and the interest they made offset the taxes. Anywho, Red Violet deserves to be doing that well. What's this app? Yeah. Hey, by the way, this is a brokerage. Yeah. If you want to get this software I'm on, it's in the link tree in my bio. That very first link there. All right. Okay. Saw one of your older videos. Thoughts on BRX? So is that Green Bray Air? Oh no, Brixmore Properties. Yo, I love Brixmore Properties. This is another one of my favorite REITs out there. This is a pure grocery store REIT. They're a triple net lease REIT. Their main customers are Kroger, Publix, Amazon Whole Foods, Ross, Dress for Less, and TJX is actually their number one customer is TJX, and TJX stock has done surprisingly well. It's like a store. Yeah, look at TJX. Wow, all time high on that one. So actually, I really like Brixmore. They just have good. Their actual customers are good. They own good assets. They own this shopping mall right next to my house, so they have a huge like proudly owned by Brixmore sign. They only have like 30 of those up, where they have like a proudly owned by Brixmore sign. I actually found out about that from that sign. Anywho. Yeah, Brixmore is cool. Why is the market refusing to release money? Hey, what up, D Lang? Hey, what up, good time? And hey, what up, Carlos? Yeah, I've been gone for the past couple of days, but we're finally back. All right, let's check out Duolingo right here. Duolingo just reported earnings. Let's check it out right here. Oh, it says, all right, let's check out the earnings hub page right here. So subscription revenue up 46% year over year. This is the thing I love about them. The fact that it's still up 46% year over year is why I might buy the dip on them. User engagement improved with daily active users increasing 36% to 50 million. Gross margin declined due to higher AI and cloud hosting expenses. Let's check out their numbers, what they reported. So beat on revenue. Okay, one-time adjustment to the EPS. Let's go here. We go to the operating profit. So it really was a record quarter. The operating profit, the core business grew 160% year over year. So the net income was $290 million. They didn't actually. That's going to force their PE to look artificially lower. Their PE isn't actually 25. It's more probably like 31 or something. But actually probably a little higher than that. But the great quarter. Yeah, they just deleveraged their balance sheet. They paid off. Again, liabilities go down with assets. That's why it fell together. But you focus on the ratio right here to check out their leverage. They deleveraged by a lot. It literally went from 63 to 30. Great record profit quarter. I'm actually, I'm going to put them back to the top of my watch list to buy the dip on. I mean, they're still a slight bit expensive, but this is the best part about Duolingo. They're a subscription model company in that language learning app. Look at the subscription revenue. It's up 45, and this is Q3. It's up 45 after it grew 48, after it grew 45, after it grew 47. Like the growth is nuts on the subscription revenue. If you don't pay for the subscription, you see a bunch of ads. And if you go to their advertising revenue, it's up 45%, 55, like these year over year. The fact that they're so growthy makes me want to buy the dip on them. Like these are good enough numbers for me to buy the dip on them. Like if you're going to buy a dip on a stock, buy one with good fundamentals, and this is one I'd buy the dip on. Super not financial advice. And by the way, I'm not an expert. I sell nothing. I have no course book, literally nothing. I'll never follow you. DM me. Yeah, please watch out for people impersonating me. I was asked, like, is that you that just followed me? No, that's not me. I'll never, in a nice way, I'll never follow you, DM you, nothing like that. But yeah, there's also the AI thesis is hurting them. Like OpenAI made a language learning app competitor. Google's working on one. So, hey, what up, Cruz? Good to see you, homie. Hope everyone's having a great Sunday. By the way, we stream every Sunday this exact same time. We're also going to be live in exactly 8 hours exactly from now. We're going to start it at 8 o'clock. It's basically 12 p.m. now. At 8 p.m. we're going to start the stream when the market's open. We're going to do another 3-hour stream. Okay. What broker do you use? Yeah, hey, this is Moomoo. If you want to get this brokerage I'm on, it's in the link tree in my bio, that very first link there. It's also an affiliate link too, so we'll both get some free stocks if you sign up with my link and deposit money. Okay, anyway, let's see. Novo Nordisk, let's do this one. So the Medicaid, Eli Lilly mainly benefited from this, and Novo Nordisk kind of didn't. So Novo Nordisk was trying to buy Metsera. It's another weight loss prescription. This is a pure weight loss play. They own Ozempic. Elon Musk is on Ozempic. Wegovy as well. 93% of all their revenue is their diabetes and obesity care products, so their weight loss prescriptions. They're also trying to buy Metsera as another weight loss prescription. Why are they trying to buy another weight loss prescription when they already have a bunch like Ozempic? It's actually because they lose exclusivity for Ozempic in a couple years, about 2-3 years. So it makes sense. They're trying to buy Metsera for $10 billion. Also, the U.S., like in Medicare or Medicaid or whatever, just allowed Ozempic and Zepbound into like the Medicare, Medicaid for like a $150 a month. Anywho, I'm wording all this weird. That's kind of what's hurting this stock is the fact that they lose their exclusivity for Ozempic, and that's why the multiple is so compressed here. If we go to their PE ratio, they literally traded 12 PE when the industry average is 22 because of that. But yeah, so it looks like the net income fell 22%. Was that real? Oh, it really was real. Operating profit fell 26. So the revenue grew by 10. The revenue grew by 10, but the net income fell by 22, which means their net margin fell from 38 to 26. So that's also another, and that was real too, not some one-time adjustment. Like their margins really did fall like that. I do wonder. You get a nice yield here though, 4% yield now. Wow. I don't know. It might be fully priced in. Like now might be a potentially good time to buy the dip on them. But it looks like Pfizer is also competing to do that acquisition. All right. Someone said VIVK stock. We'll check this one out. So this is, oh, hey, we don't really cover these stocks. Okay. If you look in the top right, that's the market cap. That's how much the whole company is worth. They're only worth $21 million and they're at an all-time low after doing a bunch of stock splits. So we just don't cover these kind of stocks on the channel. The whole company's worth 20 mil. And look at this. Like, here's why, like, you can't trust these names. Like, the reason they're at all-time lows is because they're almost surely going bankrupt most of the time. Again, like, just think about this logically. This is why I like looking at the numbers. You know, the whole company is worth 22 mil. So imagine this. You can buy, literally, if you wanted to, you could buy the whole company for 22 mil. So So you buy the whole company for $22 million, and here's what you're buying. Literally buying a company that lost you $12 million of net income in just 3 months. And the 3 months before, $8 million. 20 million. It burned you net income for all of eternity. So I don't know. I'd be careful. I wouldn't buy the dip on that one. So yeah, anything under like 100 mil or even a little high, we're not really going to cover those. Okay. People have been saying Beyond Meat. Yeah, we're not going to cover that one. That's a complete meme short stock. Yeah, it's not, it could go up, but not in the long run. Yeah, the stock's already at an all-time. Here's the thing. What's the short interest? I am curious. Whoa, it just soared up 67% short interest. So 67% of the entire shares are being shorted. That's so funny. But yeah, this stock is, you don't buy the dip on them. Again, it could be a fun little short-term swing trade. You put it like one share in or something, but you don't trust this one to just buy and hold. They are probably going to go bankrupt. If we look in the top right, the market cap here, they're worth 550 mil. So think about, remember that the whole company's worth 550 million. They lost 30 mil, 50, 30, like just all of eternity. They just burned through 100 mil. They used to lose 100 mil a quarter. Like, they're burning all this net income, and they have they're super leveraged, twice as much liabilities as assets. How are they going to pay off all their debt? They can't issue shares. They can't issue more debt to pay off the debt. And they lost the growth, like the lifeblood of the company, the sales, the revenue. Are people buying their product? Well, America's kind of said no to plant-based meat. Look at this. The revenue is down 19%. After it fell 9%, after it fell 30%, after it fell 1.6, like they are on a declining streak. So I'd be super, super careful with this name. I wouldn't buy the dip on them unless it could be a fun little short-term swing trade, but not one I trust with real money. All right, so not to back on anyone's stock here. Okay. Oh, there's a warning. What is this? Okay, what up, Looney? TPL, I think TPL and Landbridge are two interesting names. This is, if you're looking, this isn't, they own like I think it's like 200,000 acres of land in Texas, and they give their mineral, water, and oil rights to other companies in exchange for royalties. So this company legit just collects royalties. So, this isn't your normal average oil and gas stock. Their margins have been going down a little bit, but 90% gross margins because they've been slowly investing into other stuff. But 60% net margins, really good net margins, phenomenal balance sheet, literally no debt at all on this company, completely debt free. If we go to their net income, if you look at any other oil and gas stock right now, any of them, their net income is down 20, 30% year over year because the price of oil, but they're making consistent streams, 100 to 120 million plus of after-tax net income every quarter, and it's growing. What about the free cash flow? Let's see. That's what FCF stands for. Free cash flow has been good the past 3 quarters. So anyway, TPL is interesting. Yeah. Probably a little bit expensive here, 47 times net income, and that is real. Does Morningstar have any like actual research on this company? No, they don't. Is there anything on the earnings hub? No. Okay, well, anyway, they're I actually really like this one, and I'd like to eventually like they're on my watch list. I'd like to eventually get into them. They also do sometimes frequent special dividends, or I know they used to do a bunch of them back in the day. Like, look, they only do $1.60. Look, boom, $10 special dividend, $3, $3, $20 special dividend. I remember back in the day, yeah, $10 special dividend, $10. They did like a crazy special dividend one time. Anyway, they're cool. Um, all right, let's do progressive stock right here. I do actually own them. It's been so long that like Weeble needs to refresh. Dang, we've been locked in on the Moomoo app. Okay, where is Progressive Corp? So yeah, we do actually own Progressive Corp, and we are down. We're down 11.6% on them. I actually really like. If you're looking to diversify in more of a defensive kind of industry, in insurance. Check out Progressive Corp. They were up 3.6%. Again, I still think they're worth buying even right. I'm still down 12% on them. I just bought a little bit more fractional share more of them. It's worth buying even right now, not financial advice. And I'm not just recommending them because, they're well off all-time highs. I'm recommending this stock, not financial advice, because they're a good quality growing company according to their numbers. Like if you go to their personal lines right here, like it's always 20% plus, like it's up 20%, 25 up after growing 23. If we go to on an annual basis, literally every year just hits a new record every year, every quarter. That's their personal lines, the commercial lines as well. Well, that's the smaller portion of their business, but everything about this company is headed in the right direction. But their margins were they slightly missed on their margin and net income. It was like literally no big deal. Like if we were in 3 years when we look back, like it's going to look like this is business as normal. These are great numbers. So this is what I love about the company. They're legit making over 2.5 to sometimes 3 billion plus of net income a quarter. And look at these growth rates. At this growth rate, what's the net income going to be the same time next year? But look, they made let's just say they're making 2.7 billion in net income a quarter. Well, this company pays a dividend, and the dividend only cost right here, the dividend only cost $59 million a quarter. If you're wondering, well, why does it say 2.7 billion right there? That's when they do their yearly special dividend. So they do a special dividend every January, which is pretty cool. So that's what's so cool about this stock. They do frequent special dividends to reward the shareholder. They don't suffocate themselves right now with the high payout. Their payout ratio isn't actually 34%. That blends that with that 450 special dividend. So anywho, I really love the management here. And if we could just go to their PE ratio, price to net income, they're trading at 11.9 times net income, or PE. Industry average is 11.4. So maybe check out Progressive if you're looking for a cool insurance kind of dividend. Again, the yield right now, the normal yield is low, but that's when you add in that yearly special dividend, you get like a 2% plus yield. Kind of cool. What was that? Texas oil stock? Yeah, that was ticker symbol TPL. They're in the S&P 400 mid caps. I don't think they're in the S&P 500 yet. They're worth, 22 bill. Wow, they're big. By the way, if you missed anything, I'm also streaming on YouTube. That's the best way to support me, by the way, to watch the stream from YouTube. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But you can just type into YouTube Nathan Robert. Okay, so Ishan said, can we do FIG? You should probably invest in Microsoft and Google for the upcoming decades. Hey, I own a bunch of Google. So here's Figma. This is kind of like the company people are saying is going to, actually, funny story. Adobe tried to buy this company, but the US regulators approved it, but the EU regulators didn't approve it, and they weren't able to do it. And they had to pay Figma $1 billion as a termination fee because of it. But anyway, here's Figma right here. They IPO'd not too long ago. They're at an all-time low. Again, they just IPO'd, but I actually really like their numbers. Wait, are their numbers out? Let me check down here. Weekly news, strong Q3 numbers. The company added 1,000 plus customers and 10,000 plus annual thing. Company launched 50 new AI things. Well, let me check out their numbers right here. So yeah, 2025 Q3. Again, they just IPO'd. So there's when we go to the revenue right here, it's limited, but beat on revenue, slight miss on net income, and a big beat on EBITDA. So that was probably from their IPO fee. Yeah, that always happens. So again, don't worry about this big loss right here. If we zoom out, they're always making net income before today. So they didn't actually lose that money. The revenue's up 30. Like these growth rates are good. The revenue's up 40 after grew 50. So a lot of colleges that I'm at is like mandating classes use Figma. So they're actually interesting to maybe buy the dip on. All right. Hey, what up, joke? Jim said, I think Iron will start to run again this week. Oh, so this is actually a data center kind of play, like a small core weave. Let's see. I know I think a big company like, oh, Iron sign. Yeah, the big company is Microsoft. Iron signs major $10 billion cloud deal with Microsoft. So basically, oh yeah, and Dell is going to be helping them out. Some of the Microsoft Azure clouds are going to be on Iris Energy servers. But the one thing I really loved about this, like this is the reason they've appreciated so much in stock price, and this is really what justifies it, in my opinion, is how growthy the numbers are. If we just go to the revenue right here, the revenue is up 355%. After grew 50%. After grew basically 200%. So the revenue the growth is nuts, and not just the revenue's growing. So not just the top line, but the bottom line. The past 4 quarters, they've made net income every single quarter. That must be a little one time. Yeah. So they didn't. Okay, they didn't actually make 300 million, but definitely interesting stock right here. I love the sales growth there. Yeah, looks like a miss on the EBITDA. So there was some little one-time adjustment there. There was a little funny money. So they actually lost money this quarter, technically, when you include taxes and everything. But anyway, the growth is nuts on them. All right. Yo, sorry, I'm so behind here. I'm missing so many stocks. I do apologize here if I'm missing some of these stocks. Like, let's see. William said NBIS Nebius. Hey, speaking of all these like cloud names like CoreWeave and stuff, if we go to the Nvidia portfolio right here, hell yeah, and Microsoft doing deals with a bunch of people. Nvidia owns a bunch of CoreWeave, APLD. They also own a bunch of Nebius stock. And Nebius, let's see if we can find it in the news down here. They signed, a $17.5 billion Microsoft cloud deals. So some of the Microsoft Azure clouds. So like Microsoft doesn't want to hold the bag. So they're like now going to rent their servers instead of having their own. They're renting it from Nebius and the other name Iris Energy. So anyway, here's Nebius right here. Another one that's just seen phenomenal growth, just like Iris Energy. But look at the revenue. The revenue went from 14 mil to 100 million year over year. Like that's insane growth. They're not net income positive yet, but and look at the analysts are expecting it. They're expecting the revenue to be 265 million in 2 quarters. So that's immense growth expected on Nebius. So it's kind of just like a pure growth name. As long as that top line growth continues, the stock should just probably continue to go higher as well. I wouldn't trust the valuation. The risk reward doesn't look too great on that name right now, though, to put in a meaningful amount. What happens is, oh yeah, hey, by the way, this is a brokerage where you buy stocks on. If you wanted to get it, it's in the link tree in my bio, very first link there. It's free. My favorite, I got all the brokerages right here. If you wanted to get any of these, if you're looking to buy stocks, you got to get a brokerage. And this was my favorite one right here, Moomoo, very first link in the link tree in my bio. It's free, and that's where it shows all the super investor portfolio. Link tree in my bio, very first link. Those are all affiliate links to full disclosure. So if you go and like deposit $100, we'll both get like some free stocks or like help out the channel. But anyway, you can just type it into Google though, just brokerage, Moomoo, Robinhood, Weeble, whichever one. Okay, so let's see here. Pfizer, any news? Oh, wait, actually, let's celebrate. What up, dude? Homie, he's always here. Let's check it out. MVST. So this is Microvast. Let's check it out. Hey, what up, Jonathan? Pfizer. Yeah, we'll check out Pfizer. Hey, what up, Watt? Greetings, homie. So we'll look at, MasterCard. Yo, hey, Rye, what up, dude? Yeah, we'll try and get to AVD and all these. So here's Microvast right here, a $1.6 billion company. The stock has actually done phenomenally well. Is there any news down here? Weekly news. They're about to report earnings. Wait, when do they report earnings? On the 10th. Wait, when is that? That's tomorrow. So literally tomorrow. So get ready because this stock, on earnings day, the stock either goes up or down a bunch. So they did miss last quarter on revenue. So let's hope this quarter they beat on revenue. Looks like they're making money every quarter. That's the good part. The operating profit. They're having some one-time adjustments from their net income, but the actual core business is making a lot of money right now. They should actually be making close to like 10 mil of after-tax net income a quarter. But we'll see what happens on earnings. So yeah, but if you buy them now, it's kind of like betting into earnings. So good luck on them tomorrow. Oh, wait, let's get to Pfizer. Oh, someone said SoFi. Hey, Maid, remind me to look at SoFi. We got to get to SoFi here. So here's Pfizer stock right here. They're actually putting a bid to buy a company called Metsera. Oh, wait. Here it is. It's down here. Pfizer acquired. Oh, wait, did they actually already? did it fully acquire? Oh, wow. So Pfizer secured the acquisition of obesity drug developer Metsera for $10 billion. So that is so now Pfizer again, their growth story was gone. Again, Pfizer has done terrible. If you look at Pfizer stock, they're actually the same prices they were back in 1997. So they've done terrible. It's mainly a dividend play. Look at this dividend. You get a 7% dividend, and they're now buying Metsera, which will bring them hopefully a lot of growth into their weight loss prescription play. Yeah, looks like the revenue's down 6% year over year. Hopefully that'll bring the revenue growth back. But here's what we mainly want to focus on. Look at the net income. They're just now finally getting back to a sustainable dividend. They made $3.55 billion of net income this quarter. Remember that. They made $3.55 billion in net income. The dividend cost $2.45 billion. So they actually were able to, that was real. They were able to easily afford the dividend. So the dividend is safe on Pfizer. And that Metsera acquisition will be interesting. So I'm actually, you mainly are buying them for the dividend play. 7% yield is really good, I will say. So actually, if they dip from that acquisition news, because they did the accretion. Remember, this was a big bid versus Novo Nordisk. Novo Nordisk actually lost the bid. They upped the price, so that means the synergies and accretion they get from the EPS goes down here. Hey, Fort Lauderdale here. I see more downside on SPY and SMH. You think, hey, what up? Yeah, SMH is definitely more. This is your pure chip play. This is an interesting ETF right here. If you're looking like, hey, I don't know whether to, I want exposure to the whole AI hype, but I don't know whether to buy Nvidia or Broadcom or AMD or ASML, the lithography or Intel. Which one do I buy? Well, you could actually just buy this ETF right here, ticker symbol SMH. It just breaks your money up for you into all the semiconductor names right here. So it's kind of a more diversified way to get exposure, and it's done phenomenal. Like in 2019, this was 76. Now it's 355. So that's your pure chip play ETF. Pretty cool. There was another. Dude, I'm missing out on so many stocks here. Let's get to SoFi first. There were stocks. Okay. Ooh, Spider said Palantir. I want to get to Palantir and all these. So, okay. When are you starting an ETF? That's funny. Oh yeah, well look at Allison too. I want to check out Allison. So here's SoFi Technology. This is one of my favorite fintech names out there. I do own them. Full disclosure. If we actually head over here to my Weeble portfolio. We have 24 shares of SoFi. We're up 375% on them. I used to own a lot more shares of SoFi. I regret every share I've ever sold of SoFi. Same with Robinhood. But here's in my opinion why I'm not going to sell any more shares, and I wouldn't really recommend anyone else do this either. Like they deserve all this stock price appreciation. I think they deserve the high multiple because they're high growth. If we just look at their financial services business specifically, like this is crazy. No analyst expected this. Revenue's up 105, after grew 101, after grew 222, after grew 260. Like this growth is nuts. And here's what the analysts expected. That's the orange line here. Every quarter they're beating they expected 895. They reported 950, a big beat on revenue, a big beat on EPS, which is net income, and a big beat on EBITDA. Like they're triple beating. They're super net income positive now, making over 100 mil of after-tax net income a quarter. That's why I really think people are taking SoFi serious. So I wouldn't. They are a bit expensive here. I wouldn't buy them significantly here yet, but yeah. Okay. Oh yeah, AVD. Let's check out this one right here. Hey, what up, Pontes? He says, "What's in Nasdaq and S&P 500?" Yeah, those are the ETFs right there. So AVD. This is American Vanguard. Not sure what this is. They're only worth $140 million, and they're actually the same price. This stock is the same price that it was in 2003, and they're worth $100 million. Let's see why. So that's probably why. Look at this. So the whole company is worth just over 140 mil. Looks like they lost in 90 mil, 25 mil, 9 mil. Looks like they're losing a lot of money right now. And it also looks like they pay a dividend, or actually they just had to cut the dividend. Yeah, that makes sense why they had to cut the dividend. I was going to say, how are they going to pay a dividend when they're losing all this net income? So it looks like there's high bankruptcy risks here. Yeah, their assets are going down while the liabilities are staying the same, leveraging them up. And the revenues it's not too growthy either. So hey, dude, Isaiah, shout out to the homie Isaiah for the hand heart there. No way. I appreciate that. He said, thoughts on MRK? You know what? Honestly, I might prefer a Pfizer here. Let's check it out though. Merck. They also, I think, have a high yield. Let's see. No, let's see here. Dividend yield. Yeah, you get a 3.78% dividend, and the payout ratio is of 46%. Let's go check out the dividend and see how safe it is. Oh, yeah. So they're in pharmaceuticals. I guess they sell a bunch of different prescriptions, and it looks like they're also in animal health. So that's all. That's actually interesting. 10% of the companies, their animal health business, 50% of the revenue comes from the US. But if we just go to their net income right here. Yeah, wait, is that real? That was real. They're making 4 to 5 billion. Let's just average out. They're making 5.2 billion of net income a quarter. So they're making 5.2 billion in net income a quarter. The dividend only costs 2 billion. And since they have so much leftover money, they're doing a bunch of share buybacks. So they're spending, yeah, look at that. Now over a billion in net income a quarter on share buybacks. So it looks like they're just really shareholder friendly, deleverage the balance sheet too. So it looks like a financially sound company, but I think the reason they maybe have just been struggling is just because of the slow growth and the sentiment around the sector. Like if you look at the revenue's up like low single digit, 3, -1, -1, 6, 4, 5. So we just want to see higher growth, and then maybe they could do an acquisition or something. Hey, thanks again, Isaiah. I appreciate those gifts. Oh yeah, so let's look at ALSN. This is Allison Transmission. So apparently, what was this? Someone said like they used to make the F-150 trucks. You said they're loony, something like that. Nessie, what up? He said ticker symbol ball. Or do you mean a bull like Weeble stock? So here's Allison Transmission right here. You get a nice yield, I think. Yeah, so a 1.3% dividend, but notice the payout ratio. Payout ratio is only a 12%. So there's a lot. They could literally double their dividend right now, and the payout ratio would only be, 24, and that would get you a 2.6% yield. So anyway, that's what I like about this company. They trade at 10 times PE. Industry average is 23. Let's see if that's real. Did they have any yeah, that's real. So again, I think the reason they're trading at 10 times net income is because the revenue is slowing down, or it's negative, super negative, like it's negative 16% year over year. So the sales are down 16 and the net income is down by 31. So that means their net income is falling as well. So honestly, it's probably justified that they're at this like 10 times multiple, but this is an interesting name right here just because are they doing share buybacks? So check this out. The net income's down 31 and the net income per share is only down by 28. So they've bought back 3% of the shares plus the 1.3% dividend. So yeah, it's just this big miss on the negative revenue growth. They expected 750 mil of revenue. They only did 690. So the slowing growth explains why the stock is down bad from its peak. But honestly, definitely put them on the watch list because if they can bring the growth back, they're certainly interesting. I got a signed SoFi. Hey, nice, Ryan. Hey, what up, Logan? Good to see you. Hey, remind me to look at Pfizer. We did look at them a bit ago, so we'll look at them in a second here. Oh, yo, try not to spam there. Hey, hold on here. All right, let's see here. Bull stock, actually, I actually just bought a little bit of bull in my Roth IRA. That's what I was covering at the beginning of the stream here. I bought, again, not much, but I plan to make this more. I bought 5 shares of bull. I actually have an interesting bull case on bull. Again, ticker symbol bull. Saying that word a lot, is this brokerage right here, this app right here. And here's why I think there's going to be a lot of growth for this app. If we look at this right here, they actually just brought in the middle of my screen this prediction market. They brought the prediction market and they just brought crypto back. So I haven't opened my crypto. I don't do crypto, but they just brought back crypto and the prediction market. I think that's where they're going to make a lot of fees. They don't make too much money whenever you just buy and sell a stock, but whenever you go buy and sell crypto or do the prediction market stuff, they're going to make a juice of a commission and a juice of a fee. And that's why I think, and they just added that. So that's why I think there's going to be a lot of future growth toward Weeble that maybe analysts aren't going to see. And plus the stock literally hit an all-time low. Again, they just IPO'd, but they just hit an all-time low. So I'm like, hey, why not buy the dip? Uh, NASDAQ best tech stock. Hey. Oh yeah, hey, remind me to the homie Jeff Mack is here. Yo, we gotta get to Coinbase. So shout out to the member Jeff Mack. He says ticker symbol coin. That's Kathy Wood stock right here. We can go to the Kathy Wood portfolio. Her third largest holding is Coinbase. Kind of like a pseudo Bitcoin play. Let's see, does AI have anything to tell us about Coinbase? No. So they actually just reported earnings. Okay, actually. Okay, hold on. It's on a bad. I actually unplugged my mic. That's good. Okay, wait. Test. Oh. Okay. Let me know if my mic is good. Okay. Here's Coinbase right here. Let's check this out. Monthly transacting users. This is really the metric you want to look at. Monthly transacting users, not just monthly active users, but monthly transacting users are 9.3 million. So that's pretty significant, up from, I guess, how far does this metric go back? I guess from 8 million, but transaction revenue increased 83% due to higher crypto volatility and trading volumes. Subscription and service revenue grew 34%, supported by stablecoin balances. Operational metrics, 90% growth in monthly active users and record assets under custody. Wow, $300 billion of assets under custody. And let's check out their numbers down here. Net income. Yeah, so they are net income positive every quarter. That's great news. So okay, thanks for that. Yeah, great. Looks like the audio's fixed. They fixed their balance sheet issue. They used to report their balance sheet in like assets under management, and they stopped doing that. So that's why you see like a weird. Anywho, this is it. They have a good balance sheet now. Actually, I do like Coinbase. It's like a pseudo crypto play, because kind of just follows what crypto does. Kind of like actually, I like Robinhood as well. I like Robinhood as a crypto play too. Because they make a lot of crypto transactions, but they're different though. Larry, what platform is this? Yeah, hey, I'm not sure. All these platforms, these are all brokerages right here, where you buy stocks on. They all ask for a bunch of information to send you a tax form. If you want to buy stocks, you need a brokerage. If you want to get any of these brokerages, they're all my favorite. They're all in the link tree in my bio. This one right here is my favorite one. It costs nothing. It's free, no commissions at all. Link tree in my bio, the very first link there. Yeah. Oh, by the way, all those links up there are affiliate links, so help out the channel too. Okay, so anywho, let's see. Fubo post Disney deal. So yeah, I think the upside is limited. Like they already got their money from Disney. Like the stock can mainly only go back to $5.50. So you could juice it back to $5.50 buyout price, but I think that like it's limited to that right there. Like if it wasn't for the Disney deal, like this stock doesn't have great metrics anymore, or they've lost the growth that they've had that people loved around this stock. Like if it weren't for the Disney deal, this stock legit might actually be bankrupt. If we go to the revenue, the sales, the revenue is down 2%, down last quarter 2%, and the net income that net income influx was from Disney, but the core business is starting to narrow their losses. They only lost 20 mil this quarter, but we kind of want to see the growth come back. I would just look elsewhere. Actually, my side of the bet, funny enough, is Disney stock. I don't love Disney as I might actually give Disney the boot eventually, but they're. Oh, I almost want to pull up a screenshot. I got an ad yesterday. You can was it $20, $29.99 a month? You can get ESPN, Disney Plus, and Hulu. It's like their new bundle because they just bought the remaining stake from Hulu from Comcast, and they're merging all those streaming services. Another kind of interesting streaming service play is Disney, and they rose their prices too. So Fubo's interesting. All right, okay, good. All right. Let's see here. Nvidia, please. All right, let's do Nvidia. We haven't looked at Nvidia yet today. We'll check this one out. What do you think of Hood? Yeah, I love Hood. We'll check them out too. I wouldn't buy Hood at this price though, or not meaningfully. I'm up over, I think, 10x on Hood. We'll check out that stock next. Luffy said, "Did you buy anything last week?" Yeah, I bought Hood, Weeble stock. There's some a bull. So anyway, here's Nvidia right here. I didn't realize how aggressively they've fallen from their peak. They went from 210 to 180. Nvidia, I love this industry, but I think it's a hard double just because, like, to just buy shares and never sell. Like, if you look in the top right, the market cap, it's 4.5 trillion. So for you to double your money, they have to be worth pretty much 10 trillion. So I think it's just a harder double. I would kind of go with, I think they're still going to do great. They'll probably still return 10% plus a year, but I would go with some other name. Like I owned an AMD. We just hit our first double on AMD, which is cool, or pretty close to that. But yeah, we chose AMD. But Nvidia, let's go over them because they're a great stock to never sell as well. So check this out. They have a big GPU market share, 24% market share. They also have this automotive business in there was Lucid. They had a deal with Lucid. Lucid is going to use their automotive software and give Nvidia revenue for it, but some other Uber. It was Uber. Uber is like partnering with Nvidia for their automotive software as well. It's hidden, almost like a hidden Tesla competitor right here. But again, mainly this is a data center play. This is what justifies to basically 5 trillion market cap. If another company can pull this off, then they also deserve to be worth 5 trillion. I mean, the revenue went from 3.8 billion to just insane year-over-year growth rates, and not just growth to the top line, but also the bottom line. Making 20 at these growth rates, I don't know what it's going to be this time next year, but they're pretty much making over 20 billion of after-tax net income a quarter. Like, that's after they paid over 2.5 billion in taxes. Like, it's insane the after-tax net income they make. It's insane the margins that they have. Their pricing power, 56% net margin. Google challenges Nvidia with new Ironwood AI chip launch. Hey, that's really interesting. Anyway, they also, Nvidia took like a $5 billion stake into Intel. They took like $1 billion stake into Nokia. And Nvidia is so big, they own a bunch of individual stocks as well. I think Nokia will get added soon to this list right here. Please, app. They own a bunch of CoreWeave. Go on Wi-Fi. Don't give up on me now. Let me unplug my phone. Oh yeah, so they own a bunch of CoreWeave, APLD, ARM, Nebius, and some other names. So yeah, Nvidia's a nice one. What's your favorite stock you think will do best for the next 2 years? Well, hey, honestly, if you look in the top of this portfolio right here, this is called my buy, never sell account, where once I buy a stock in here, I legit try and never sell it. And these are all the stocks I think are going to do good and just continue to win. Like, I'm not trimming any of these, but yeah, all these stocks here, I like bull stock, and I also have my Robinhood portfolio right here. This is my dividend only portfolio, but I should basically call it my dividend buy never sell account, because I kind of just never sell any stocks in here as well. But yeah, these are all the dividend, like S&P 500 companies. Buy the S&P or buy S&P 500 names like Meta. Like, Meta's a steal, I think. Cheapest Mag 7, I think, right here. McDonald's, Google, Constellation Energy. Yeah, Google's done phenomenal. All right. Meta, please. You know what? Let's do Meta stock. We haven't done. Hey, see ya. Hey, oh wait. Yeah, let's go over Hood real quick. Hood actually just reported earnings. Yeah, I'm up crazy on Robinhood as well. Look at this. So I'm up 850%. I own 5 shares. This is the sad part. I used to own 50 more shares, or even more than that, but I sold it at a way lower price. So I regret every share I've ever sold a Robinhood. But this stock deserves to be doing this well. Phenomenal fundamentals. Like it's insane. So net cumulative funded accounts, they got 26 mil. But look at this their after-tax net income they're making. This is after paying, like, this 550 mil of net income is after over 120 million of taxes they paid. They are now printing money. Like, if we look at the first ever $1 billion, or just basically second ever $1 billion revenue quarter, revenue's up 100% after it grew 36, after it grew 24, after it grew 47. Like, they're on a streak of growth, and not just top line, but again, bottom line. It's insane. The margins, look, legit 43% net margin, and that's a real net margin, because that's after the tax. Like, it's insane the money Robinhood's making. And it makes me more bullish for Weeble stock as well, because the reason Robinhood's printing money is right now is because they just introduced this prediction market, and they said they have over now 6 billion contracts done. And so whenever the Robinhood CEO tweeted that, the stock went up like 10% a day. And so that's where brokerages make a lot of money. Again, they're not making much money whenever you buy and sell a stock, but whenever you do the prediction market stuff, and whenever you do stuff like crypto, that's where they make a juice of a commission, a juice of a fee. So, and the Robinhood users are, the most kind of stuff to like, to do that kind of stuff. And honestly, Weeble users as well. So that's why I own Weeble stock. I own Robinhood stock. I own Futu stock. I own SoFi. I got all the fintechs because I love them. Honestly, Hood is a never sell stock. It's so tough to buy it here, but I definitely put them on the watch list for sure. They're in the S&P 500 now. Hood is amazing. All right. Okay. Charlie said, okay, hope I can find this one. AACAY. AAC Technology. So this is an ADR. Looks like they're so they're the same prices they were back in 2012. So you bought the stock in 2012, you're down on your money. They're a Chinese stock, an ADR. So we convert the currency from Chinese yuan to USD. Let's see, electromagnetic devices, acoustic products, optic products, premium sound, uh, markets. So Greater China, America. So 36% of the revenue is America. I like the international exposure. So this is in USD. So for the first half of this year, they did 120. So they're making like 60 mil of net income a quarter of USD. Oh, they are Chinese, so they'll always trade at a low valuation. You get a nice dividend, uh, uh, low payout ratio. So yeah, it's like some Chinese. Maybe you can check out their website. If it'll load here. Do you see Bull ever doing hood numbers? I don't know. That's why I only own like $150 of Bull stock. Okay. You think Monday's going to be bullish? I don't know. We'll check it out when the market. By the way, if you want to hit the follow button, I really appreciate that. But by the way, I sell nothing. I have no course book, WhatsApp. I'll never follow you, DM you. I don't sell anything. Only thing I do have is a YouTube channel. Best way to support me is just subscribe to my YouTube channel and hit the follow button. But we're going to be streaming as well in exactly 8 hours. We're still going to be streaming for another hour and 40 minutes right now. But we're also going to be doing another 3-hour live stream at 8 p.m. tonight if you also want to hit the notification bell. So let's keep going here. If you had to invest all your money in one stock, what would it be? In one stock, probably something safe like McDonald's, Google, Microsoft, something like it can just trust for 50 years. Chipotle, let's do Chipotle. Let's check them out because Chipotle is at an interesting multiple now. They're finally at a multiple that's like justified. Again, I've been telling people I wouldn't buy the dip on Chipotle. I think they're going lower. We've been saying that for months, and then they went lower. But now their PE, their price to net income, is a 27. That's right at the industry average. So Chipotle is right at the industry average. Again, Chipotle is struggling. It's not just Chipotle. The whole restaurant industry is struggling. Like check out Wendy's stock. Wendy's is literally at a pretty much all-time low, lower than they were in 1997. If we look at like a Jack in the Box stock, this is so sad. Jack in the Box, all-time low on this company as well, way lower than the pandemic crash. Even like a donut, ticker symbol DNUT. This is Krispy Kreme, all-time low. So I feel bad for all the restaurants right now, but Chipotle is definitely one of the more quality names because here's the value in this one. If we go to their net income, yeah, it's negative year over year, but they still print money. I mean, they're still making 300 to 400 million of after-tax net income a quarter. Let's see. Again, before today, they had a high multiple, like a 35 PE, and it was unjustified because they always were missing on their growth. High multiple implies high growth, but they're missing on growth expectations. That's why the stock collapsed so much. But yeah, missed on revenue expectations, slight beat on EPS, slight miss on EBITDA. So wasn't the end of the world of a quarter. Let's actually see what the Earnings Hub has to say real quick. Anything interesting here? Margins contracted with restaurant level operating margins down 100 points. Digital sales remained robust, accounting for 36% of sales. Revenue growth was driven by 84 new restaurant openings and a 1.1% increase in the average check, partially offset by a 0.8% decline in foot traffic. So there you go. I still like the net income they're making. I think they might be doing some share buybacks too. All right, what up, Logan? He said FLNC. Let's check this one out. FLNC. So Fluence Energy. Hey, they've had a nice little recovery. I don't know this name, but it went from $3 to $20. So it's like they were going bankrupt, but then something saved them. Maybe they got like a big contract. What's the short ratio? So okay, before today it was so a 15% short interest. That is pretty high. But let's see what they do. Revenue from energy storage products and solutions. US is 54% of revenue. The revenue did look really choppy before today. Looks like they're struggling to get net income positive as well. But I'm guessing they got some like future contract, which is great. Revenue is supposed to be 1.4 billion next quarter. They did miss slightly. I wouldn't try the EBITDA. It's kind of like a rebound play. I would be careful with this name. It's done great though the past couple months here, but I don't know about the risk reward anymore. Um, yeah, I don't know. Interesting name. Ooh, yeah, that short interest. Yeah, that's all the shares that are being shorted. So, like Apple, only like 1% of the shares on Apple are being shorted. Like people are betting, that the stock is going to go lower, and it's 17% on them. So you're like battling the shorts. Would you sell Amazon at the market or keep holding? Keep holding. Yo, absolutely keep holding. Like if you're 10 years away from retirement or even more, like I would not want to exchange my Amazon for cash right now. This is a great like if you do exchange it for cash or you do trim or sell out of Amazon, like you need to get back in. Like even if you pay a higher price, like you need to eventually get back in this name. Or just me personally, I'm probably so biased, but I'm such an Amazon permeable. Yeah, actually Amazon just got a 40 or maybe it was more than that. Yeah, 30, yeah, for $40 billion Amazon or OpenAI cloud deal. Yeah, their Whole Foods grocery expansion. They just expanded into over 1,000 cities. Now has the same day grocery delivery. Like this is literally an ETF in one. It's a grocery store. It's like a Walmart. It's a UPS, an Instacart, an Oracle Cloud, all in one. They're a subscription play, e-commerce play, cloud play, AI play, robotics play, drone play. Logistics play, real estate play. I mean, the book play. I mean, the list. I love Amazon. So yeah. Hey, no way, Steve-O. Dude, thanks for the confetti. No way, homie. If you got a stock you want me to look at, let me know. I got you. Okay. I don't love UNH here. The risk to reward doesn't look great on them yet. I just don't love that industry. I think the sentiment's still kind of bad. Yeah. I would, hey, no way, Isaiah. Thanks for those gifts there. I would just kind of stay. I don't love UNH at this price, but Warren Buffett did just buy the dip on them. Let's see. Actually, let's go check out the sentiment on UNH. They have been falling the past couple of weeks here. Actually, they are interesting because they just reaffirmed guidance because the government actually allowed them to raise prices. But so the EPS, they just confirmed it is going to be $6 in 2 quarters, which is great news because it was originally like unknown. It was going to be like potentially negative. So yeah, by the way, their margins collapsed to 2%. Their net income collapsed because they're not going to, basically, it's no secret, they've been overbilling the federal government, and that has led to a lot of their high margins, and now some of that's going to end. So their net margin's kind of permanently going to be lower in the future, but it's interesting. We're a customer. We use OptumRx. OptumRx is really growthy, double digits. Warren Buffett bought the dip on them. You get a 2.66% dividend yield. So if you kind of look at it from that way, near 3% dividend, hopefully for 5% stock price appreciation. Interesting one to buy the dip on. I wouldn't keep it as a meaningful size position, but Warren Buffett bought the dip on them. We can actually see that right here. If we go to Buffett's holdings right here, we can view his latest changes, and we go to new. Like first time, he's never previously owned this. He bought 5 million shares in the most recent filing of UNH for the first time ever. He's been buying a lot of the industry sensitive names like Pool, Lennar. Not sure why he bought Sirius XM stock, probably for the dividend, but no, the homie Tory Potter is in here. No way. Okay, I'm so sorry if I'm missing out on so many stocks here. What are your top nuclear plays? Hey, good question. And then we'll look at, actually, let me pull up MOH right here. If you're looking for the number one nuclear play of all time, like I see someone talking about SMR, SMR is kind of like a momentum play more than like a pure. They did just get like their first contract, but honestly, if you're looking, by the way, SMR and Oklo, those are making the small modular reactors, and SMRs are proof of concept. There's only 3 working SMRs in the world, and none of them are in the U.S. But CEG is my favorite one. This is the purest play for nuclear by far. There is no close second. The second place would be Vistra Energy, but this company CEG literally owns 30% plus of all the U.S.'s nuclear reactors. So CEG's purest play for nuclear energy. They own 30 plus reactors. Vistra Energy owns 4 reactors, ticker symbol VST. But yeah, CEG's your main play, purest play. Some of the other names, though, you can buy it for like momentum purposes. But if you're looking for the purest, best one that does dividends, share buybacks, M&A, CEG's the one, best one. And I'm totally biased as I own them. But yeah, SMR is interesting too. Are you currently using? Yeah, hey, by the way, someone's asking what brokerage was that. Yeah, hey, this is Robinhood. And by the way, all these brokerages are all in the link tree in my bio. They're all affiliate links to full disclosure. You can just type it into Google. This is a brokerage called Robinhood, Weeble, Moomoo. I got all these right here. So yeah, all of them are in the link tree in my bio. But let's look at MO. This one right here, very first link in the link tree in my bio. My favorite one, lowest fee. So here's MO. It's free. All of them are low fee, but okay, MOH. This is Molina Healthcare. This must be a UNH kind of competitor. Medicare, Medicaid kind of play. Let's go see. So yeah, look at this. I've never heard of this one, but look at that. Yes, 70% of the revenues, the Medicaid, then they're in Medicare, then some other operations. So yeah, again, all the Medicare, Medicaid providers, their margins are collapsing because they're not going to be able to overbill the federal government anymore. So the EPS projections are expected to collapse. Actually, this one has no dividends. So that's actually good. Because UNH like pays a dividend next quarter, they're not going to be able to afford the dividend based off their net income. They have the cash on hand to pay for it though, and then they're going to be able to afford it next quarter. But yeah, you're really focusing on the margins. Like the revenue is going to be growing, like probably double digits because they just announced another 6% increase. But I don't know about the margins on that. So yeah, that's what you're really watching. Okay. Braze. Hey, what's the ticker symbol? Hey, what up? 6 star. What up, dude? Which financial software? Oh yeah, hey Edwin, for y'all on the YouTube stream, it's in the link in the description. If you're on TikTok, it's in the link tree in my bio. Yeah, I'm streaming on YouTube and TikTok right now. Hey, best way to support me is watch the stream from YouTube. YouTube channel is called Nathan Robert. Link tree in my bio. Hey, and if you're enjoying, appreciate if you drop a like on the stream too. I don't know if I've ever said that, but hey, if you're enjoying, okay, let's see. Can you check out the best tech ETF? I really like VGT right here. This is the Vanguard Information Tech ETF. You know, it's basically the QQQ. Oh, actually, it has an interesting holdings in here because it's not like the QQQ actually. So Nvidia is its largest holding. So if you put $100 in this ETF, 17 of it goes to Nvidia. But then it's Apple, Microsoft, and then Broadcom. You know, notice no Google or Meta yet. Then it's Oracle, Palantir, Cisco. Cisco's done phenomenal. And they have a great yield. I'm actually going to put Cisco after their Splunk acquisition that bringing them into cybersecurity. They're so cool. IBM, AMD, Salesforce. So VGT is interesting. Low, like 0.08% expense ratio fee for them. Okay. Open door. Hey, that's kind of a momentum play, interest rate sensitive play. No, this is one you don't trust for the fundamentals. You swing trade this one. Is there any news on this one? Open door partners with Rome, 1.2. So their dilution again. So here's the thing with Open Door. If we go to the revenue right here, look at this. The revenue's down 35%. Here's what people are excited about. If we go back to 2021, 2022's revenue on Open Door, they were printing money. You know, 4 to 5 billion of revenue a quarter. These growth rates were nuts. But this proves they're super interest rate sensitive. But notice as rates hiked up super fast in 2022, when the market crashed, look what that did to the revenue. Down 50, 70, 69, 62. The revenue collapsed, and it's kind of just been flat ever since because the high interest rate environment. If you're wondering what Open Door does, they just flip houses. They're not very good at it. I've been to a few of them, and they just burn through net income every quarter. Like pretty much, they lost 100 mil this quarter. They just lose money every quarter. So you don't buy this one for the fundamentals. You're kind of just buying them. And actually, they just did something smart. They just diluted. Anyway. They did the share offering to fix up their balance sheet, but Open Door reaches $39 million settlement in federal class action lawsuit. Really, over alleged misrepresentation of home pricing algorithms. Okay. Anyway, that's Open Door. Rates just got cut as well. We can actually see if we go. What's kind of cool is we can see how interest rates are doing. Let's see if it'll load. If it doesn't load, we won't pull it up here. Okay, yeah, here we go. So on the December 10th meeting, which isn't too far away, 66% chance of another 25 base point cut in January or February. There's another 50% chance of another 50 base point or 25 base point cut, and more cuts just based off the Fed dot plot expectations here. So as rates go lower, that one might be an pure interest rate sensitive play, but I'd maybe go with like a home builder or something. I would consider PayPal a buy. You know what? PayPal is definitely a cheap, interesting play right here. You know, I hate how many fees I give to PayPal. Like, it's actually not good. But yeah, PayPal's the same price that it was in 2017. This is what I love about them. They're doing crazy share buybacks. Check this out right here. If we go to their cash flow statement, we can see how much they're doing. So you won't believe this. You ready? If we look at the very top here, they legit spend pretty much $1.5 billion of their after-tax net income a quarter solely on buying back their own stock because the shares are so cheap right now. And what does share buybacks do for you as a shareholder? You might be asking, what's the benefit of that? Well, here's what that does for you as a shareholder. In short, it forces the stock to go up. But check this out. The net income is up by 23. So the net income's up by 23. But the net income per share is up by 32 or 31 because the share part of the ratio went down. And since the EPS is going artificially higher, that makes the PE ratio go artificially lower. So it makes the PE ratio go lower. And I think they just started paying the dividend now. That makes the cost of the dividend go down. Gives you more ownership in the company. It's just great for the shareholder. And they just reported earnings. They beat on their revenue. They beat on their EPS, which is net income, and they beat on EBITDA. So it was a triple B quarter on PayPal. I wouldn't have it as a huge, meaningful size position, but I just saw they're like a buyback play. And hopefully they can bring this growth back, single digit growth on PayPal. That's why I think they've been struggling, 5, 1, they did 7%, but 1, 4, 5. So, and they brought a dividend. That's interesting. As staff, what up, dude? He says SEZL. Yeah, let's check it out. Ooh, we'll get Palantir after this. We'll do Palantir. Some of these other names. Hey, what up, Ant? Good to see you, homie. What up, Michael? Exxon, yeah, we can look at Exxon too, for sure. In Power Solutions, I love PSIX too. We'll check them out. So here's Sezzle right here. I've actually been shocked at how bad they've been doing. Like, what's their... Oh, no way. Wait, actually, let me pull this up over here. SEZL. So Sezzle has a 17 forward PE. That's so cheap. They literally trade at 17 times PE. Here's what I also found fascinating. If we go to, they're pretty much the same thing as Dave right here. They do like the same thing. Ticker symbol Dave, even after all this crazy stock price appreciation ticker symbol Dave has, they're only trading at 19 forward PE. So Sezzle's a little bit cheaper than a Dave. Let's go check out their numbers right here. I wonder what happens. So beat on revenue, beat on net income, and a slight beat on EBITDA. So it looks like a good quarter. What did the earnings hub say? Let's see what AI has to say about their... Oh, never mind. They don't say anything. Well, anywho, let's see. So revenue is up 66%, and the profits are up... We're up by 72%. The best thing about this company is their margins. Like, they legit have 20 to 30% net margins. The gross margin expansion is crazy. Like, margins are expanding, revenue's growing. Like, this is a stock, not financial advice. Like, you want to put on the watch list. It's worth nibbling on, right? It's worth actually buying the dip on, I think, like just based off they're deleveraging their balance sheet. Look at that. The liabilities used to be 75% of the assets. Now it's only 57. They're making net income every quarter. And the forward PE is a 17. They're trading at 17 or 18 PE. It's certainly interesting. Yeah. Okay. Which website do you use for this data? Yeah. Oh, yeah. By the way, this is a brokerage. It's where you buy stocks on. If you want to get the software, it's in the link tree in my bio. That very first link there. Brokerage called Moomoo. Okay. I'm not. All these brokerages are. I think maybe you're talking about Weeble, or they're all in the link tree in my bio. All right. Oh, so let's get to Palantir right here. I forgot to get to them. Palantir just reported earnings as well. I'm actually curious to see if they what AI has to say because they're a big company. Actually, here's how we do that. Earnings Hub, what do they have to say? So government segment revenue was up 55%. The government revenue growth has been nuts. Commercial revenue, no way, up 73. Is it loaded in down here? Let's see. Okay, is that... Whoa. Like this is what's crazy. The growth rate is growing on Palantir. Like they deserve the high multiple they have. Well, I wouldn't pay it, but they deserve a high multiple. But check this out. Commercial revenue's up 73% after 27% growth after 15. So the growth rate's growing on them, which is crazy. And also not just the commercial side with S&P 500 companies, but also the government revenue. You know, a lot of police stations use their software, the military, the Air Force. Even a lot of people actually don't like Palantir because ICE is using them. Yeah, check this out right here. The government revenue is up 55%, also to a new record. I mean, the growth is just nuts on Palantir. It's like a pure growth play, beating on every expectation every quarter by a huge margin, making net 500 mil of net income this quarter pretty much. Phenomenal margins, fortress balance sheet, literally no debt on Palantir. They literally have no debt, $6.5 billion of cash on hand. I mean, just a beast of a growth company. Um. Okay, wait. Let's actually check out ExxonMobil right here. XOM. So here's a nice actually the largest oil and gas play. It's like the safest one out there. Oil and gas stocks are good, like a defensive play. You don't want to have it as a meaningful size position in your portfolio. But whenever there's war fears, inflation fears, currency fears, just whatever, oil does good in those environments, and that's why you want to have oil. I think is a small percent of your portfolio. Is whenever tech does bad, this will be a nice defense. And in the meantime, you also get a great yield. That's with these oil stocks, a 3.4% dividend yield. We've had a weirdly slow summer for oil, but they print literally 7 to 8 billion of after-tax net income. It is down 13% year over year, but still they print money. Good, like the safest oil and gas stock out there, ExxonMobil. Exxon acquires 60% stake in Greek offshore gas project. They do crazy share buybacks as well. So there you go. Yeah, again, you don't really expect that company to outperform the tech-heavy S&P 500 in the long run, but you buy it for that defense. Grab. Oh, hey, let's do Grab right here. Actually, this is a fascinating company. This is International Uber. So yeah, if you're wondering what is this company, what do? They do exactly what Uber does, but in all these other countries. Notice the US and Canada isn't on here. It's Malaysia, Indonesia, Singapore, Philippines, all these other countries, which is pretty cool. And what's so also fascinating is Uber bought a stake in them. That was genius by Uber as well. So Uber's the largest shareholder. They own 13% of all the shares. Toyota Motor owns 5.5% of all the shares. But that was smart for Uber because that gives Uber instant international diversification. Also, this company make net income every quarter. They're finally net income positive, making 10 to 20, or they're making 10 mil plus in net income a quarter. Free cash flow, or they just did an investment. Let's actually see. Investing in the future. Yeah, dude, look at this. If we go to their cash from investing activities, it was negative 400 million. So they just bought some asset or a stake into something new assets of some kind. So this is one I like for the international exposure. Kind of gets you. Like we know the commodity of ride sharing works. Like Uber proved it, and I guess people in all these other countries as well need it. So you can just basically get exposure to that. Get exposure away from the US. Hey, so George said Elf Beauty. Yeah, so a lot of consumer stocks are struggling. What platform are you using? Yeah, hey, this is a brokerage right here. If you want to get this platform I'm on, it's in the link tree in my bio, that very first link there. But here's Elf Beauty. It's called Moomoo. Here's Elf Beauty, a $4.4 billion company. Let's see what their earnings were. It looks like the market did not react well. Wait, let's see. Oh, what am I clicking here? Clicking the wrong stuff. So weekly news. Gross margins declined due to China tariff cost. Let's just see what they reported. Oh, so yeah, look at that. The revenue from the analyst expected 365. They only reported 340, so they missed on revenue, a big miss on EPS, and a slight miss on EBITDA as well. So it's kind of a triple miss quarter. Yeah, the net income, was that real? That collapsed. Operating profit was 7 mil. That doesn't include the taxes, and they paid a couple mil of taxes, 3 mil. So yikes. So revenue's up. So the sales growth was there. Revenue's up 15 after grew 40, but the net income collapsed. TikTok just said your live is no longer eligible for For You page recommendation. So yeah, again, best way to support me, guys. If you do, TikTok is always doing stuff like this. Best way to support me is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. Just type in YouTube Nathan Robert. I'm also streaming on there. So yeah, if you want to support me, that's a good way to. So yeah, the viewer count should just go to 0, sadly. But anyway, hey, shout out to everyone on YouTube. I really appreciate all y'all. But yeah, did they do an acquisition or something? Whoa! So this is something you might want to look into on Elf Beauty. This might be why the net income fell so much. It looks like their cash and investing activities. They just bought an asset for $600 million. That explains why the balance sheet just bumped up like that. So I wonder what that new asset they bought was. Maybe they bought a new beauty company. Who knows? Maybe that might explain why there was growth to their revenue. Maybe that acquisition. Who knows? That interesting. Grab just got a bunch of price talk. Oh, hey, nice. If we Hey, what up, JVM? Good to see you, homie. Axon stock. Yo, dude, try not to spam there. Um, yeah, hey, we already looked at Robinhood. We'll probably get to them later if you remind me in like 5 minutes. But I love Robinhood, phenomenal earnings, great never sell stock. Um, Wait, what did I want to view here? Yeah, Elf is still interesting though. I would maybe nibble on it. I wouldn't have it as like a meaningful size position here. Um, Oh yeah, Axon. Oh yeah, that's why I was pulling up this portfolio. Axon stock. I'm down bad on this company. We're down 15% on Axon. They kind of deserve to. This company has an insane multiple. Actually, let me tell you guys how expensive they are. They trade at 400 times next year's net income. So like more expensive than Palantir. But if you're wondering, this is your number one like police body camera play, cloud play, and D drone play. So many police stations and royal families use their D-drone solutions, but yeah, this is a very interesting stock. Their net income really did go negative. Like they used to make this net income, but the net income went negative. Sales are up 30% though. I love the. I can't wait to get this company on a meaningful dip. Like for them to fall to something I could really pay, like $400 a share. I'd put them on the watch list. I would not buy them here yet. Like I bought one share, and even then I didn't feel great about it because their one share is so expensive. But yeah, great name there. What's that platform you're using? Yeah, hey Diaz, what up, dude? I'm not sure which platform we're talking about. All these brokerages right here are all in the link tree in my bio, or this one right here. If you, very first link in the link tree in my bio, this one right here. Um, okay. Um, hey D-Tish, what up, homie? Any specific reason you have multiple brokerages? Oh yeah, hey, so each, if you're wondering why do I have so many different brokerages and accounts right here, yeah, there's no burden of having multiple brokerages right here. It's just an extra, you just get an extra sheet of paper already filled out tax form. So there's no burden of having multiple brokerages. So I just like having psychologically different portfolios. Like this one right here, if you look in the top left, it's called dividend only. Every stock in here pays a dividend, so that's my dividend only portfolio. This one here, if you look in the top left, it's called my buy and never sell portfolio, because once I buy a stock in here, I legit try and never sell it. Then on Weeble, this is like my risk on portfolio, where I don't really have any like specific rules here. I kind of just do whatever I want. But yeah, those are the three portfolios I got. We definitely underperformed. If you've got any questions for me, I love being fully transparent. I'll share with you all my winners, all my losers, my lifetime performance on all my portfolios. If you want to see my year-to-date or anything, just ask me and all. So anyway, let's keep going here. By the way, I do portfolio updates all the time on my YouTube channel. So yeah, that one, dude. PSIX, let's check this one out actually. PSIX, I want to check out what they did. So look at this one on Friday. They fell 19%. Let's see what they reported. So a big beat on revenue. It's a beat on revenue. They beat on net income and they beat on EBITDA. So it was a triple beat quarter. That's odd. Yeah, these are great numbers. This is why I love the stock. I'm actually looked to buy the dip on this one. The revenue's up 62. The net income's up 60. They print money every quarter. What's the market cap now? It's like $2 billion or 1.5 billion. So this company, it reminds me it's like a in Powell Industries phase. Trade at 12.5 times PE. Actually, it's higher than that. They really traded like probably 18 times net income. Last quarter, they had a little one-time adjustment to the net income. They actually only made like 30 mil, but they trade legit so cheap. I'll show you that I own them as well. We're up 2% on them now. So there's the blue line is my average cost basis line. So honestly, put them on your watch list. Man, that was a glorious dip to buy. They fell to 44. Shoo. If I was paying attention, I would have bought the dip on them with that number. So if they go back to 44, I'm afraid they'll be trading at such a cheap valuation. They're deleveraging. Like I actually just like them. Oh wait, let me get to NetEase right here. Wait, isn't this NetEase, I believe? This is the company, I believe. Yeah, this is the company that's making Marvel Rival, or they already made it, Marvel Rivals. They own a bunch of like video games and stuff like that, but if you heard of Marvel Rivals before, I only point that out because I learned that because Disney was mentioning that they're collecting royalties from NetEase or they licensing revenue because NetEase made a game called Marvel Rivals and of course uses all the Marvel characters. So yeah, online game revenue. What is this? 3.1 billion games and related revenue. NetEase Cloud Music. How's that doing? We can check. It's down 2% year over year. But anyway, if we go to their net income right here, and we converted the currency from Chinese yen or won to USD. This is good. They're making over $1 billion of net income every quarter. You get over 2% dividend. Look at how they raise their dividend every year. So yeah, this is one. It's a Chinese. It's an ADR. So they are Chinese, but it's like the stock's done phenomenal. Tencent's another great company. Tencent. So yeah, there you go. Hopefully that was helpful. Can you? For first timers, what's your recommendation? Yo, I would just buy the S&P 500 and QQQM. Like it's so simple, and a lot of people like just don't do it. But have this as the backbone of your portfolio. Buy the S&P. Breaks your money up for you into the top 500 companies in the U.S. Not just most retail investors, but most hedge funds can't keep up with the S&P 500. So if you can't beat it, you need to have it as some portion of your portfolio, or it'll drive you crazy. So own the S&P 500, and then pick some individual S&P 500 companies that you know, love, and use, like Meta, McDonald's, Google, Constellation, like companies you've heard of before. Buy those. Then don't just buy it because you've heard of it before, like Ford. I wouldn't buy Ford stock, but Nvidia stock, AMD, or whatever. Waste management. Let's do waste management. Actually, I just bought the dip on them actually. So waste management reported earnings. So if we look at them in the past month, they reported earnings and then they dipped. And I'm like, this is a great company. I love waste management. I'm talking like if there's a stock that's like can't be hurt, like AI proof, we're always going to need, like people always throw away trash. Like waste management is probably one of the safest, most quality stocks in the market. Pretty much shared oligopoly with Republic Service, another great one I'd also buy, RSG. But yeah, we only own one share of waste management. They've kept up with the S&P 500. They just bought this like healthcare disposal business. They missed on their growth revenue. They're like the expectations were kind of high because of the acquisition. So they slight miss on revenue, one-time adjustments to their net income, slight miss on their EBITDA as well. So, but yeah, they don't do any share buybacks, but they return money. Yeah, they did a $8 billion acquisition that quarter. Yeah, Bill Gates owns it. Bill Gates is the second largest shareholder, the Bill and Melinda Gates Foundation. They own 8% of all the shares. You also get a nice 1.6% dividend. They raise the dividend every year faster than inflation. It's great. Just never sell stock. Hey, yo, Dr. One Fly. Hope you're having a great Sunday, dude. Thanks for all the gifts. Ice cream cones, dude. Thanks, homie. I appreciate that. And said, K-Boss TMC stock. I feel, unfortunately, I don't love this one because it's kind of a startup. It's so much future hopium that I personally can't pay for. I've looked into this one. I actually used to own shares, and that was like years ago. But if we go to the revenue right now, it says 0 because, again, they're a startup. They've never sold anything. They've never sold a product or service. They're right now in startup phase. They're making these, I kid you not, underwater robots that go to the bottom of the ocean, and they suck all the heavy metals and the minerals out of the water, like the nickel and the zinc, and then they sell it. Or that's the plan. But again, I don't know when it might just never happen. Like, it's a story. They lose a lot of money. Wow, 75 mil in net income this quarter. They were able to, one of the reasons the stock has kind of been hyped up because they were able to issue 100 million shares and beef up the balance sheet. But anywho, I wouldn't buy that one or touch it with anything meaningful. Would you prefer Moomoo over Weeble? Yeah, hey, I would prefer Moomoo. Yeah. Trash isn't going anywhere anytime soon. Hey, I agree. Is SPLG a good S&P 500 fund? SPLG, yeah. Let me actually, wait, SPLG, is it going to let me view it? Huh. Won't let me, SPLG. Well, hey, that might be an index fund. Anyway, wish I'd give you thoughts on it. Maybe I'm typing it in wrong or something. Okay. Hey, what up, Professor Pumpkin? Sorry, I'm so behind on chat here. Yeah, QQQM. Yeah, a lot of people also like the QQQ ETF. If you heard of the NASDAQ 100. Life hack, buy the QQQM. It's actually the exact same ETF. Literally exact same ETF, also run by Invesco. Same NASDAQ 100 strategy, just with a 0.15% lower expense ratio. So for every $1,000 you put in, you're saving $15 a year in fees by buying QQQM over QQQ. All right, so it said IDEXX. Let's check it out. All right. What up, Nick? Let's see. So, wow, this stock is at an all-time high. Check that out. They're worth $55 billion. Looks like they gapped up on earnings day, so there must have been some good earnings. Let's see what they were. So, yeah, the analysts expected 1.07. They did 1.1. They beat on revenue, they beat on EPS, and they beat on EBITDA. So, yeah, no wonder they gapped up on earnings the past 2 quarters, because on every quarter they're beating up by expectations by a good margin. Let's see. Yeah, this is great net income growth. They're making so consistent, like 200 to 280 mil of net income a quarter. Sales. So, look, the revenue's up 13 and the net income is up by 18. So, they were able to grow their margins. Look at that. That's what FCF stands for. It's free cash flow. Free cash flow is a record up 90%. So no dividend on this one. So that means they can retain the money and do share buybacks. Let's see. Are they doing share buybacks? Yeah. So look at this. No way. So the net income is up by 17 point, or the net income's up by 18. So net income's up 18, but net income per share is up by 21. Again, the EPS growth rate and the net income growth rate should always be the exact same. Only thing that changes this is a share part of the ratio, and they bought back a bunch of shares. So cool. They deserve to be at all-time highs. Um, hmm. RSKIA. What is this? So this is like international stock or something. That's a weird ticker symbol. Risk George Industries. They're worth so they're worth $80 million. So very, very small company. They sell security alarm products. Are they net income positive? They are. So 4 mil. This is after tax net income. Is that? So not actually. So they must be making interest. Okay, so they're only making about 1.2 million of after tax net income a quarter. But look at this. Because of their fortress balance sheet, they have no debt and a lot of cash. Check this out. They have $46 million of cash that actually earned them interest. Wait, what's the market cap? So they have, what was it, 40 mil of cash? Yeah, the whole company is worth 80 million. So like half the market cap is their cash on hand, plus they're making net income every quarter. Where does the revenue come from? It says 100% of the revenue comes from the US. That's interesting. Looks like they pay a dividend maybe too. A 6% dividend. Wait, is that real? Oh, look at that. September 2025, September 2024. So every September, it looks like they do a $1 special dividend, which is 1/16 of the company. Anywho, there you go. That's a good, those are good numbers. Let's do Celsius. Yo, my bad. We didn't get to Celsius. They changed their ticker symbol. It's SPY. Oh, hey, I didn't know that actually. So Celsius right here. Wow. Let's go see what the earnings were. I didn't know. I didn't look into them. So core Celsius brand and acquisitions like Alani and Rockstar fueled 172% revenue growth, with Alani sales up 114%, and international grew 24%. Wow. Gross margin improved by 530 bips. While adjusted EPS surpassed expectations, operating cash flow and free cash flow surged. Well, let's go check out the numbers, but the stock didn't react well. Must have been some sort of bad news. They beat on revenue slightly. Oh, so look at that. The EPS, the net income fell. There must have been some sort of one-time adjustment. So, yeah, it looks like the net income was negative 60 mil, but that was a one-time adjustment because the operating profit was at a record. Yeah, check out the revenue. It's up 172% year over year. So good growth on the revenue again. They acquired Alani. Alani still owns, Alani owns 8.7% of the shares. Pepsi owns like 5% of all the shares. But also when Pepsi took the 5% stake in Celsius, they gave them a Rockstar Energy or Rockstar Beverage. So that's now under Celsius's name too. Honestly, this is a good company. I maybe look at they're interesting. Alani's huge. I like Alani's. Okay, SPYM. Why would they change their ticker symbol? That's interesting. So the SPYM. Let's check out the expense ratio fees. So yeah, the expense ratio fee is literally 0.02. I mean, it can't get lower than that, can it? Let's see what it's holding. Probably just the exact S&P 500. Yeah, Nvidia, Apple, Microsoft, Amazon, Broadcom, Google, Meta, all the great S&P 500 names. Yeah, you cannot. A great never sell ETF for sure. Hey, we just looked at PayPal not too long ago. If you give me a minute there, we'll check them out there. So yeah. All right. So Progressive Corp. Hey, what up, Luffy? Hey, should we look at Progressive? We looked at them a bit ago, but actually, Progressive did a bit decent on Friday. I think they're up like 3%. Let's see here. Hey, True Master, we also like literally just looked at PayPal. I recommend to do you actually, speaking of TurboTax, that's owned by this is a great stock. You know, I never cover this name, but it's a great stock to put on your watch list, not financial advice. This is Intuit. Look, if we look, they're the same prices they were June 2024. So basically, they've been flat for a while, and this is a quality name that I want to own and never sell. We can see the annual revenue just hits a new record every year. Just super consistent growth. You know, the consumer revenue right here. That's their TurboTax. As you can see, you know, tax time every year is when they get all the bulk of their revenue. But if we just go to their net income down here, like check this out. Like it's way more like evened out. Like they used to make like all their net income, and then the other quarters would be a bit choppy. But like they print net income. Their main quarter grew 20% year over year, 2.8 billion of. Yeah, that was they paid like 800 million of taxes, and there must have been some other adjustment too. But yeah, they really made 3 billion just that quarter, 400 mil, 400 mil. So this is a great never sell stock as well. 0.65% dividend. They aggressively raise their dividend every year, faster than inflation. Intuit's a good one. Uh, all right, Johnson and Johnson. Yo, I love J&J. This is a great never sell. Their oncology business has been super growthy. Honestly, this one could honestly, this is going to like $200 a share. Like eventually, like this is a great like never sell stock as well. It probably isn't going to outperform, you know, the tech heavy S&P 500 in the long run, but it's a good name. You get a 2.7% dividend. They raise the dividend every year. Like I was recently looking into them, like also they could pay off all their debt with 2 years of free cash flow. But if we go to their net income right here, they ever since they had their lawsuit stuff, that litigation stuff, like sentiment is finally over, but they're making great money now. Pretty much 5 to 6 billion of after tax net income a quarter. Their oncology business has been super booming. But yeah, anywho, great dividend play, dividend growth play. I don't understand the never sell idea. You want to die? Well, hey, Ranger, it's kind of just like, you know, it's not never sell, but you know what I mean? That's kind of my intention. You know, maybe I'll sell it in 10 years or I'll sell it if the sentiment really shifts from my original thesis. So, but for the most part, like this portfolio, the reason it's done so well, the reason we're up 82% year to date. Hey, we were doing just as bad during the April dip. We were down 16%, but the reason we're up 82% year to date, and the reason we're up 175% all time is because we haven't sold our stocks before today. We haven't trimmed. So it's kind of like a case study I'm doing. It's really interesting. So yeah, these are the stocks that a lot of those gains literally have just come from Comfort Systems right here. That's been the main growth driver. Bought them earlier this year. All right. I want to invest for the long term. Um, looking into a direct and hey, what up, agent? Good to see you, man. Lee said TSPH. What is TSPH? This is Create AI. So hey, we don't really cover these names. If you look in the top right, they're only worth 84 million. So a very, very small market cap, but mm, freight capacity service. That's not good. Looks like wait, that's from 2023. Do they have sales? They don't. So look, whenever they had revenue in 2023, notice it was a couple mil, then it went to 92K. Whenever it goes to zero, it doesn't show the number after that. So they have no revenue anymore. And yikes, look, if we go to their net income, they lose net income every quarter. So I don't know about that one. I wish I could give you more thoughts on them. Very small one. What or who is your broker? Yeah, hey, by the way, if you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. It's called Moomoo. Uh, yeah, link tree in my bio here. All these brokerages are all in the link tree in my bio. But yeah, they're all affiliate links too. Full disclosure. So if you go and like deposit $100, we'll like both get some free stocks. So hey, thanks for that. Oh, Rocket Lab. Hey, what up, Trey? Yeah, hey, what up? Let's do Rocket Lab. So this is probably my favorite space stock out there. There's a lot of space stocks, but Rocket Lab is my favorite one because they're the most high quality and they're really growthy. If we go to their space systems revenue right here, that's 67% of the revenue. They have real growth. Unlike Lunar and ASTS, like the revenue's up 27% after it grew 94, like just continuing the growth. So that's crazy. So their space systems revenue is booming. Also, their launch services, it's at a record up 60%. Are they about to report earnings? They report earnings tomorrow. So, hey, if you buy the stock, it's almost like you're betting on earnings. So let's see what the analysts expect. This is kind of what's cool about the brokerage. Revenue is forecasted to grow strongly, driven by space systems, launch services, neutron rocket development, okay, actually, I don't care. Yeah, they also just bought Geost. They acquired Geost and another company. Rocket Lab completes 74th Electron mission, secures 6 launch deals with IQSP. Rocket Lab earnings preview and LockSat mission update. Looks like they're expecting 45% year-over-year revenue growth. So, anywho, if you buy them now, you're kind of betting on earnings. So get ready for tomorrow. So, hey, the homie Brian's here, dude. Shout out to the member Brian. Hope you're having a great Sunday. Let's check it out. He said, hey, what up, Zoe? And the other Brian as well. Yeah, we'll look at NVTS and some of these other names, but we'll get to this stock first. AZN. Oh, this is that. This is another healthcare play. They sell a bunch of prescriptions. Check this out right here. Wait, key results. Wait, they reported earnings. This is a big oncology play. So check this out. Here's kind of some takeaways from the earnings. Oncology revenue grew 19% year over year. Respiratory and immunology segment grew 15%. Operating cash flow grew 51% due to improved working capital efficiency. While gross margins and net margins expanded notably. No way. Let's go check that out. So sounds like a good quarter. Yeah. Here's the orange line. The orange line is what the analysts expect. They big beat on revenue, slight miss on net income, but a big beat on EBITDA. Wow. So if we go to net revenue right here, so the revenue is up 12. So look at this. The revenue is up by 12. But the net income is up by 76. So they're right. The margin expansion is real here. Uh-oh. Hold on. There we go. So look at this. 16% net margin. That's a 57% increase from the same time last year. It went from a 10% net margin to a 16%. You know, an extra 6% to your net margin when you're doing $15 billion in revenue a quarter just adds money to your bottom line. So 1.85% dividend yield. So it'll be a nice dividend growth play. So anyway, looks like an oncology long respiratory play is what they were saying there. 40% of the revenue comes from the U.S., a lot of international exposure as well. So it's not just the U.S. Because there's a lot of stuff around prescription prices needing to come down, or I don't know. So anywho, cool stock. RHM, let's do this one. RHM, what up, Zoe? So biggest holding. Wait, I type in RHM. Maybe RHM. I can't find that name, unfortunately, for you. I did type it in though. Tried to find it. GILT is a really cool company. Wait, GILT, Gillette Satellite Services. Oh yeah, hey, honestly, Rocket Lab is the better play. I think this one also burns through a lot of money. Or no, wait, are they actually making money? It's a bit choppy, but they actually are making money. I'm mistaken. What do they do? I'm thinking of like Black Sky Images. I'm thinking of a different company. So they're in defense revenue. That's interesting. So they're in defense. Wait, Peru. Where does the revenue come from? Peru is 17% of the revenue. So look at this. The revenue is up 36% after grew 14%. And the net income is a little choppy, but there are quarters where they make some net income. You know, it's actually interesting. I probably wouldn't have it as a meaningful size position, but looks like they also are about to report earnings. Revenue is expected, to go to 100. It's going to go from 78 million to 130 million. So, all right. Wait, which one here? Luke? Wait, what up, Luke? He said CSPKY. Costco shipping. So yeah, there's no volume on this company, so we're not really going to cover it. It's an ADR. Terminals and related business. Mainland China is half their revenue. They are making, and this is in USD, like 100 mil of net income a quarter, but there's no volume. Can't give you any real thoughts on that one. Okay, sorry, there we go. We're back. Someone said, "Is Bull on its way to profitability?" Yes, sir. Hey, I actually just bought a bunch of Bull, and if you actually not a bunch of it, actually a very small amount of Weeble stock, but I have a super interesting bull case for Weeble. They're at an all-time low, and I just bought the dip on them. If you want to learn why, go check out my most recent YouTube video. I do it's the very first stock I go over in that video. We do a deep dive on it. By the way, yeah, that's the best way to support me. Go watch my most recent YouTube video where I look at stocks the same way we do on the stream. I'm trying to build up my YouTube channel. I barely get a couple hundred views on a video. But yeah, that's the best way to support me. Like, by the way, I sell nothing. I literally have no course, book, WhatsApp. I'll never follow you, DM you. Watch out for people impersonating me. I sell nothing. Only thing I do have is that YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio, but just type in YouTube Nathan Robert. Let's keep going here. Let's see. And it's my 44 trillion invest. Hey, what up, Dale? Um, and Hunter, he said ONDAS on DAS. Oh, ONDS stock right here. Ooh, someone said CoreWeave. Hey, Jerome. Hey, remind me to look at that. What stock do you have the most of? That would be Comfort Systems, ticker symbol FIX. I'll show you that after this. But it looks like this company reports earnings on the 13th. So yeah, again, very, very, very small company. Revenue is 4 or 5 mil a quarter. But notice in 2 quarters, it's expected to be 9 million. I guess if you annualize that, that's 40 million in revenue a year. Revenue growth segment, recent contracts. Guess we'll figure out what happens there. So if you buy this now, you're kind of betting into earnings, but expected revenue is 7 million. So guess we'll see what happens there. But yeah, a lot of investors or people are happy or are just watching this growth. If they beat on growth metrics, that could, send the stock even higher. Anyway, I wouldn't keep that one as a meaningful size position. They're just so tiny, still losing money. Can Robinhood get to $200? I sure hope so. I do own some Robinhood shares. All right. Oh wait, let's get to CoreWeave right here. So actually CoreWeave, that's in the Nvidia portfolio. So let me pull this up right here if it'll load. There we go. So, oops, hold on here. The thing just disconnected. Okay, we're back. So yeah, someone said, what stock do you own the most of? It's at the very top here, ticker symbol FIX. But if we go to the super investor watch list right here, here's the Nvidia portfolio right here. The largest holding is actually CoreWeave. Nvidia bought the dip on them. Earnings preview. So there's also a lot of earnings this week. That'll be very interesting. So CoreWeave Q3 financials show strong order backlog. Wait, $30 billion order backlog. That's interesting. Here's the crazy part about CoreWeave. Even like before today, like the growth has just been insane on this name right here. Revenue was 400 mil. Now it's 1.2 billion. So this was a record, first time over $1 billion. So it did 1.2 billion this quarter. Analysts are expecting it to be 1.8 billion in 2 quarters. And there's also a bunch of data center CoreWeave new partnerships, CrowdStrike CoreWeave partnership, AWS. There's so many they might beat on revenue. They still lose a bunch of net income every quarter, but it doesn't matter right now. As long as they keep up the top line growth rate, CoreWeave is certainly interesting. I wouldn't probably have it as a huge size position, but they report earnings in 2 days. Yo, worst. Yo, dude, thanks so much, man. I really appreciate that, Worst. So let's see right here. Is there an earnings preview on CoreWeave? So CoreWeave expected to sustain strong revenue growth driven by AI, cloud demand, and strategic partnerships. Nvidia and OpenAI partnerships. So anyway, interesting. And Nvidia owns a big stake on them. Still so curious on RHM. Yeah, hey Zoe, I Rain Metal. Is that I think that I've heard of Rain Metal. That's like a European name. They have a different ticker symbol. You know what? Maybe I can type it in and find it for you. You know what? Thanks for being on the YouTube stream. Well, I'll type it out for you. Rain. Oh, here it is. So it's ticker symbol RNMBY. We found it. Let's go. So yeah, I think they are. You see how the volume's a little choppy. Where are they headquartered? Let's go figure it out. They're HQ'd in Germany. So They're a Germany. I think they're an aerospace and defense place. So you have vehicle systems, weapon and ammunition, electronic solutions, and power systems. Rest of Europe is 40. So Germany is 30% of the revenue, and another 50% of the revenue is just the rest of Germany. So, rest of EU. So it's like an EU aerospace and defense play. They're making good net income. Look, every quarter, they're making a couple hundred mil of net income after tax net income every quarter. And the growth rates are the best part. That's probably why the stock has surged so recently. Maybe that was a big beat on growth expectations. So there you go. Hopefully that was helpful. Hopefully that was the right stock there. So Nice is the ultimate software company. I believe this is an Israel company, and just because of that, they always trade at low multiples. But let me see. So they are headquartered in Israel, but this is a very nice company. I totally agree. Dog cheap valuation. Hey, what up, Kevin? We'll look at McDonald's. Hey, nice worst. ALBBY. Maybe we'll check that one. Oh, there were some others. I'm missing so many stocks, so I apologize. But this stock here trades at 14 times PE, customer engagement, and this is financial crime and compliance revenue. They're like in a niche industry here, but check this out right here. It's not just the revenue, but the net income. This is crazy, and this is in USD. And the growth is real. They're making 100 to 200 million of after-tax net income a quarter. So they're making good net income and a phenomenal balance sheet. Deleveraging, I think they're making a bunch of interest on their cash every quarter. Let's go verify. They are making legit 14 to 15 million of interest on their cash every quarter. Like, that's what's so crazy about these cash-rich companies. The analysts are expecting the revenue to continue to climb higher. Same with EPS and EBITDA. So cool software name to put on your watch list. And I think even though they're headquartered in Israel, I'll show you this. So they're headquartered in Israel, but look at this right here. I think most of their revenue, America's principally the US, is most of the revenue is America. Israel's 0.1% of the revenue. So anyway, they're cool. What do you think? Low PE. So, Jam, he said UDMY. Let's check out this one. UDMY. So this is Udemy. Yikes. Unfortunately, this stock is literally at an all-time low. So they're only worth $750 million. Let's see if we can figure out why this stock is at an all-time low. So enterprise, consumer, how's that doing? Enterprise revenue is up 5. Looks like that growth rate was slowing. Ooh, and the consumer revenue is down bad. Look at these declines in the middle. Revenue down 10% year over year. The US is 36% of the revenue. Are they missing? So actually they're beating on expectations actually. And they're actually looks like they're just now getting net income positive. But it looks like the growth has just slowed down. Look at this. So the revenue is only up 0.1. So that doesn't really beat inflation, 0.1. But they were net income positive just for the first time ever. So I don't know. I wonder if they have a moat or something, but yeah. Hey, Michael, I don't know why that either. Another kind of Israel stock is Perion Network right here. Stock I got out of, sadly. Took a big loss on this company. Hey, I recommend, guys, if you're going to buy a stock, I recommend you DCA, you dollar cost average. That's where you slowly buy into the stock instead of just spending all your money on one day. This is why you don't follow me. Don't trust me. I'm not an expert. Look at this big loss here. Always do your own research. And by the way, none of this is financial advice. I'm not an expert. I'm a college student. I sell nothing I have no course, book, nothing like that. I'm just on here giving my opinion. So let's check out McDonald's right here. Actually, check this out. Cool fact. 1 in 5 customers tried the snack. 1 in 5 McDonald's customers, regular customers, tried the snack wrap as they brought it back, or that was something that they noted. But yeah, this is one of my favorite stocks of all time. A great never sell company. It's actually a real estate royalty company. A lot of people don't know that. Like in 2008, when every other stock dipped, this one didn't. This is 2008 right here. This stock didn't dip in 2008 because actually they bought a bunch of cheap land. But even in a recession, McDonald's owns the land under 8% of the store, so they collect rent from every store, no matter what, even in a recession. And also they're a royalty play. If you go spend $100 at any McDonald's, $4 of that goes back to McDonald's as a royalty, a sales and marketing royalty, because the franchise doesn't have to do any marketing, but McDonald's Corporation does. They run all the TV commercials and all that. And so anyway, look at their international markets. is up 10% year over year. The U.S. market grew 1% year over year. But they print money. They're also, they're a real estate play. They make a bunch of net income and free cash every quarter, and then they just reward it to you via share buybacks. Yeah, cash from operations grew 25%. That was great news. So they share it with you via, you get a great 2.4% yield. They raise the dividend every year. They just rose their dividend. You now get $1.86 a share. Here, actually, I'll show you my McDonald's position right here. I get quite a bit of dividends, almost $10 a month now in dividends from McDonald's. So yeah, we're up 7% all time on our shares. It's one of our largest holdings. And yeah, check this out. We got a $26 dividend, 23, 23, 9, 8. So yeah, McDonald's is cool. And I do own them, full disclosure. I'm totally biased. But McDonald's is one of the restaurants that aren't struggling too hard right now. Like Chipotle, like all time, or 52-week low on Chipotle, Cava, Sweet Green, Wendy's, Donut, or the Krispy Kreme, Jack in the Box. All these stocks are doing terrible. So I love McDonald's. Great never saw name. And it's like a good defense name to buy in this environment. Like whenever there is a recession, McDonald's does good in those environments. Historically, people stop going from Chick-fil-A and they start going to McDonald's more. And the value is now back in McDonald's where they actually have good prices, especially if you use the app. Anyone try the McDonald's Monopoly stuff? I went there a bunch. Heard people say, like, people who haven't been to McDonald's in 10 years are now going back to McDonald's. So the Monopoly collab is cool. That'll be in next quarter's earnings. Can't wait for that. All right. Yeah, I'm definitely yapping here. So let's keep going here. What app you on? Hey, by the way, this is a brokerage right here. If you want to get, or I'm not sure which one you're talking about. All these are brokerages where you buy stocks on. They ask for a bunch of information. They're all in the link tree in my bio. The one I'm on right now is the very first link in the link tree in my bio. Okay, so let's keep going here. Okay, XRP. Hey, yeah, XRP, Bitcoin. Those are cryptos. I wish I could give you thoughts on these. Like, here's kind of a cool feature about crypto. Like, they don't report earnings. It's like catalyst free. They can't miss on their net income or net margin numbers because they don't do that. So there you go. I actually don't own any crypto. Because that, I heard someone say this, and it's kind of interesting. Like, what do you think about this? Let's say you buy every share of a stock. Like, you buy every share of Apple that exists. You're left with a company that it makes a bunch of net income and free cash flow, and you have assets and intangible. But if you buy every share of Ripple or every coin of Bitcoin or every share of Ripple, like, what are you left with? Like, I'm kind of, okay, let's keep going here. CATO has more cash than its market cap. Let's check it out. Hey, how's it going, Aaron? Hope everyone's having a great Sunday. By the way, if you want to hit the follow button, we're going to be live in exactly 6.5 hours from now, streaming again. We're going to do another 3-hour stream. I do got to go in about 20 minutes, but here's the Cato stock. The whole company, let's check it out. So the whole company is worth $72 million. And they have $90 million of cash. Let's see, do they have debt? So they have $90 million of cash, and they do have capital lease obligations. Where is their debt? Debt. Maybe they don't have debt. I'm not seeing it on here. Normally it's way at the bottom there. Anywho, 90 million of cash. And it looks like they don't really have long-term debt of 76 million. So maybe their net cash, because they have the leases of all their buildings and stuff. And what does this company do? Wait, so they have a dividend. They can't really are they making net income? Let's see. Are they net income positive? So they're not really, well, they actually just made 5 mil of net income for the first time. So they made 5 mil in net income this quarter, and they've been paying a dividend. So what is this company? Let's figure it out. Also, they sell like a bunch of apparel. So interesting. If you like the industry, I'd maybe just rather buy an Amazon. But there you go. That's like a super discretionary play, kind of like an Etsy, a super discretionary play right here. Like Etsy, all these kind of websites are kind of not doing too great right now. Actually, we just saw Etsy's doing terrible, but eBay is actually doing surprisingly a lot better than Etsy. Hey, what up, G? Said Taiwan Semi. Let's do it. So Taiwan Semi, one of my favorite chip plays out there. If you didn't know, Nvidia just designs the chips. Nvidia designs their chips, but Taiwan Semi actually manufactures them. They actually just produced their first ever Blackwell chip ever in the US. One bad thing about Taiwan Semi is, they're 6 feet away from China making these in Taiwan, but they just opened up their Arizona fab, and they just produced their first ever Blackwell chip in their, it's either Houston or Phoenix facility. I think it was their Phoenix facility, but anyway. Pretty cool. And then that aside, phenomenal fundamentals. 71% market share for these. Like, I think they now make like 2 nanometer wafer chips. It's insane. But check this out: the net income, and this is in USD. This is after paying taxes. Like, they legit make over 10 to 15 billion of after tax net income every quarter. They print money, get an over 1% dividend yield with Taiwan Semiconductor. What about the FCF, free cash flow? Yeah, Taiwan Semi is an actual beast. Like, it's like you get Nvidia with a higher yield. You get a 1% plus dividend. They actually make like 15 bill in net income a quarter. Let's see how much the dividend cost for fun. The dividend only cost 3.8 billion in net income a quarter. So Taiwan's a beast. All right, let's see. VOO and hold, yeah. Oh, WDC. Let's check out this one. WDC. What was CATO earnings and what? I didn't know. I didn't know much about CATO. My bad for not giving more thoughts on that one. I'm not sure. It looks. So check out WDC right here. Hey, what up, Tomek? Good to see you, homie. We'll look at Wells Fargo. They're interesting too. So here's Western Digital, absolute monster of a rally. Let's go figure out what happened. It looks like they just reported earnings. I'm super curious to see what the earnings hub has to say about this stock. Oh no, they don't have anything to say. Well, let's see down here. Weekly news, strong Q1 growth. All 7 major customers submitted their first half 2026 orders, with 5 extending into 2027. That's interesting. Let's see what they do again. So 45% of the revenue comes from the US. They're engaged in the develop, manufacturing, and marketing sale of data storage solutions. So, with data centers and stuff, that makes sense. The data centers need these data storage things, but the revenue's up 27. And look at the profits here. The actual business, so their gross margins must be gross margin growth their gross margins tanked back in 2020. That's why there's such an aggressive slingshot kind of event happening here. The stock was the stock was basically a terrible company. It was flat since 10 years ago back here, but then recently something happened the past 2 years, aka AI, which just led them to a lot of pricing power. Now they're printing money. So anyway, interesting stock there, WDC. Let's look at Wells Fargo right here. Wells Fargo, this is a bank. All-time high on this one. A lot of the banks are doing really good. JP Morgan's at an all-time high, Goldman Sachs. And you get a nice yield, a 2% dividend on Wells Fargo. Not too shabby. So yeah, consumer banking, corporate and investment banking, and wealth management. So yeah, they collect their high margin or their wealth management fee money. Commercial banking. 100% of the revenue comes from the U.S. If we just go to their net income down here, these banks print money. I mean, they're making pretty much 5 to 10 billion of, or actually 5 billion of net income a quarter. Well, actually, I don't. Anywho, for some reason it's in cumulative and it's reporting in halves and not quarterly. But anyway, Wells Fargo is a good one. JP Morgan and Goldman Sachs might be better. I don't know, but they're all good ones. DDO is the true cash play. Actually, fun fact, when I bought Robinhood, the day I bought Robinhood had more they had more net cash than the entire market cap when I was buying Robinhood. So Robinhood had it was a couple billion of cash and literally no debt, or a little bit of debt, but the net debt was nothing. There's some interesting stocks here. Wait. MicroStrategy. This is like a pseudo kind of Bitcoin proxy play. There's new SEC regulatory environment around these crypto companies where they use here. If you're wondering what does MicroStrategy do, they literally, if you go to the cash and financing activities, they just dilute the life out of the shareholder and then just buy Bitcoin with it. And this has worked great, or the Ponzi worked great a year ago. They diluted the shareholder this quarter by $18 billion. They literally diluted they diluted the whole company by 20%. They rose $18 billion worth of shares and bought 18 billion worth of Bitcoin of it. And that Bitcoin's up 30-40%. So it's working. And they've been just doing that every quarter since. But now the SEC is they need extra shareholder approval steps to do more dilution to this crazy extent. They have a small software business that's not really good. But anywho, yeah, you're basically a Bitcoin proxy. And yeah, that's how their assets, if you go to their balance sheet right here, look at this a year ago. Their assets were 8 billion. How is it now 74 billion? Again, that's because they diluted you by a bunch of money, bought Bitcoin within that. Bitcoin's also gone up a bit. So yeah, kind of rather just own Bitcoin because it's really just Bitcoin proxy. I don't know. Um, Hey, JVM, what up? He said him stock. Have they reported earnings yet? Did they? Yeah, their numbers are out. Let me see what their earnings were. We haven't looked at them, or I don't think we've looked at them. So revenue increased 50%, um, fueled by a 50% rise in online revenue and 21% subscriber growth. Adjusted EBITDA grew 53%, exceeding, yeah, the GLP-1 thing. The company expected a $258 million acquisition. So they're buying a company for no, so he said a hormone health company. So yeah, they're growing their testosterone business as well. But looks like they're just continuing the growth. Check this out. Like, this is the best part. Revenue's up 49, after grew 77, after grew 57, after grew 95. Like, they're actually on a streak of growth. Looks like their subscribers are growing. They are their margins, like if you notice their gross margins are going down, that's because they used to sell a weight loss prescription on their website for like $500 a month. Now they sold Ozempic. Now they no longer sell Ozempic, or I think they sell a different weight loss prescription and it costs way less and they're making less margin on it. That's the main fear here, but they're making net income every quarter. Just good news. Like, the growth is there. That's what I like about them. I probably wouldn't have it as a meaningful size position, not yet at this valuation, but um, okay. Hey, what up, Josh? They literally print money. You're right. They literally print it. They print money faster than the Fed. So DALC. I typed that one in, Dale. DALC. I unfortunately can't find that stock. I did check though. Yeah, MicroStrategy, don't touch this one either. This sells calls on MicroStrategy. I'm not a fan of the covered call ETFs, Plus, this one has a really high expense ratio fee. It has high NAV erosion, and it has return of capital. And that all those things combined, just your future income is going to collapse. The things, it's definitely going to underperform. Like, you buy this to maximize your dividend income. The dividend says a 250% dividend. It's now nowhere near that. It's like less than 100% by far. Again, as you know, as stock price goes down, the yield goes up, but the future dividend payouts are spiraling down faster. So you don't trust that. Like, in 10 years from now, your income will be like literally those, just how the math works. Those just kind of spiral. You lose your capital slowly, and that's just, they're one of the worst recovered call ETFs. There's some other ones like JEPQ is one of the better ones. All right, let's see here. Okay, ALBBY. Alibaba Health Information. I don't know if this is the right Alibaba Health Information. Some will convert the currency from Chinese to USD. I don't know. Well, it looks like for the fiscal year 2025, their net income just shot up. Good balance sheet. It looks like Alibaba, of course, is the largest shareholder. They own 44% of the company. I don't know. It looks like some Alibaba healthcare company or something like that. I don't know. Interesting. Um, ooh, EU stock? What is this one? Encore Energy. Yeah, Hertz. Yeah, hey, actually, we'll look at Hertz after this for fun. Don't love that company. They just burned through so much net income to trust as a real investment. But here's Encore Energy. They're worth 490 million. Very small company. They're extraction, recovery, and sale of uranium for minimal property. So it looks like a uranium play or something like that. They don't have too much revenue, and it looks like there's the year-over-year growth rates are on a decline. The balance sheet isn't great, or no, it is good, but the assets are slowly going down, and it has leveraged. It could probably just because they're losing net income every quarter, then that just subtracts from their cash pile, making the leverage go higher. I don't know. It looks like some uranium play. Let's check out their website really quickly for fun here. America's Clean Energy Company, providing fuel for nuclear energy. South Texas Uranium Project. Anyway, it looks like some uranium play. Interesting. You know, if you're looking for exposure to uranium, check out just the ticker symbol URA ETF right here. This is the whole global X uranium ETF. It kind of just owns all the uranium names. What app is that? Yeah, hey, what up, Jason? This is a brokerage right here, or software where you buy stocks on. If you wanted to get it, it's in the link tree in my bio, the very first link there. So here's Hertz Global. Here's the at first glance why I can't trust this name. If we look at the market cap, they're worth $2 billion. Like the whole company is worth $2 billion. But if we go to their net income down here, oh wait, did they actually make net income this quarter? They did. They actually went net income positive. That's actually phenomenal news. Because if we zoom out before today, remember the whole company's worth $2 billion. Like they lost literally $1.3 billion that quarter. That's over half of the whole company. And then 500 mil, 800 mil. Like they lost more than the whole market cap in that year. Like, so let's see actually what is the earnings. That's actually so good that they went net income positive, so they deserve to go up. Fleet management saw transformative refresh with average vehicle age under 12 months and depreciation per unit down 58%. Customer experience improved with 50% increase in America's net promoter score. Yeah, Hertz used to have like a terrible like score of like actually doing stuff right. 70% conversion rate with liquidity. So anyway, let's see what they reported versus analyst expectations. So they beat on revenue, they beat on net income, and they beat on EBITDA. So it was a triple B quarter. It's actually not too shabby. They are still very leveraged, you know, more liabilities than assets. But as long as they can keep up this net income positivity, like if they can just make $100 million a quarter from now on, that's a game changer. That's great news. You know, Carvana's been weirdly doing really well. Yeah, hey Brandon, Pfizer actually looks very interesting right here with the Metsera acquisition. Selling calls this year from MicroStrategy. Yeah, hey Josh, nice dude. I'm a fan of if you want to sell calls, you should sell calls yourself. You know, try to avoid some of these like yield max covered call ETFs. Yo, Ari Yoshman, if you got a stock you want to look at, let me know with the ticker symbol. Yeah, hey, no problem, Tan. I appreciate you. What platform are you referring to? Yeah, hey Dale, it's in the link in the description. This is a brokerage called Moomoo. You can just type it into Google, just broker. But link in the link tree in my bio if you're on TikTok. Link in the description on YouTube. AC. So to keep it real, my real thoughts on Archer Aviation is I don't want to buy this stock because there's still there's so much future hopium you have to pay for. Like if you go to their revenue, we click on revenue, it says no data because this is a startup or they've never sold anything. They've never sold a product or a service. So there's no revenue and they lose 100 million of net income a quarter, sometimes more, well, 200 mil. So the fact that there's literally no revenue and they burn a bunch of net income every quarter is the reason I'm just staying away from this name. They do have an interesting shareholder. Like who are they backed by again? Yes, Stellantis, they own Jeep, Dodge, those kind of names. But just the fact that they have no revenue and they lose a couple hundred mil a quarter a year, I just will just stay away for now. Actually, let me pull up Pfizer right here. So Pfizer, they actually just outbid Novo Nordisk for Metsera. So yeah, Pfizer acquires Metsera for $10 billion after intense bidding war. So that's very interesting. So yeah, right here, here's the good news. They made $3.55 billion in net income because before today, the dividend payout ratio was a little sketchy, but they're finally making consistent net income. Look at this, $3.55 billion in net income this quarter. We scroll down here to the where is this dividend? The dividend cost $2.44 billion, so they were able to easily afford the dividend this quarter, or they had $1 billion left over. So that's good news for Pfizer, and they had like a 7% dividend yield, a crazy high yield. Hey, what up, Brian? He says, when will you be back on for the overnight Eastern? Yeah, right. So if you look at the top left, if you're able to see it, it's 1:52. I have to end the stream in like 3 minutes. It's 1:52 at exactly 8 p.m. for me, or exactly 6 hours from now. Exactly, I will be live. Hey, Stock Score, what up, homie? Good to see you, man. It's been a while. I remember you. So what stock to invest in right now, please? Well, hey, not financial advisor. None of this is, I actually just bought a little bit of bull stock. Actually, if you want to see my full bull case or full thesis on why I bought Weeble stock, go watch my most recent YouTube video. That's the best way to support me. Just watch my most recent YouTube video. But Weeble stock's at an all-time low, and to kind of keep it really short, Weeble is a brokerage. It's this, I have their brokerage right here. I've had their brokerage for many, many years, and they just for the first time ever introduced the prediction market. So this is new, and that's where they're going to make a bunch of money. I think high margin fees, and also they have the crypto. They just brought back crypto. That's why it says new. They just brought back crypto to Weeble as well. So I think they're going to make a lot of high margin money off that. Brokerages don't make too much money whenever you just buy and sell a stock, but whenever you go buy and sell crypto or a prediction market thing, they make a juice of a margin. So they just introduced that. I don't think the analysts expect that growth, and that's what really transformed Robinhood into this profitable beast. So I think that my next bet, again, I bought $50 of it. So it's not like I'm putting so much money where my mouth is, but I do like Weeble. I plan to buy more of that stock, but yeah, go do your own research on them. Check them out. They just IPO too. So TTWO, so this is so sad. Saddest news ever. You guys ready? GTA 6 is now delayed till November 2026. Isn't that so sad? They delayed it again. So they reported earnings. So Take-Two Interactive, these are the people that own Rockstar Games, so they own GTA 5, and as you know, they have this asset. They're in such a unique position where they have this game, this asset, GTA 6, that's about to come out, and whenever it does, there's going to be so much future revenue growth for this company, but they just announced a delay for that, which is unfortunate. So yeah, November 2026 is when we should then kind of expect. So basically 2027 is when we should expect the revenue to hit. Yeah, GTA. So flagship games achieve sales. Oh yeah, Red Dead Redemption, Wii Sports. Take-Two and NBA launched restructured 2K League. My Player may anywho, that's your game company. STGW. Oh, I got to go in 1 minute here. By the way, if you want to hit the follow button, we stream every day, sometimes twice a day. We're doing another stream. We're doing 2 streams today. We're going to do another 3-hour stream later tonight. So here's Stagwell, a $1.22 billion company. Let's go check out their numbers. They reported earnings. What were their numbers? So Integrated Agencies Network, Brand Performance Network, that's down 4% year over year. That's up 5%. So they slight beat on revenue, slight beat on EPS, and a beat on EBITDA. So actually, it was a good quarter. Yeah, they really made like 30 mil of after-tax net income this quarter. But maybe the investors weren't too happy, like a slow sales growth, like 4% growth, 5, and -2. So we kind of want to see the sales growth come back. But STGW is very cool. I like Futu. Yo, me too, Luffy. Futu is one of my... I also own them as well. Futu is a great one. Dave is... I didn't realize Dave, even after Dave has appreciated so much in stock price, their guidance was so good. They only trade at 19 times forward PE. So interesting on them. So anyway, I got to go. Hope you guys have a great rest of your Sunday. Again, we're going to be live in exactly 6 hours from now. Let me give you a quick portfolio update before I go here. Hey, Emmanuel, thanks so much. Again, if you want to support me, best way to support me is just subscribe to my YouTube channel. My YouTube channel is called Nathan Roberts, also in the link tree in my bio, but you can just type into YouTube Nathan Robert. I sell nothing. I have no course, book, nothing like that, no WhatsApp. I'll never ever follow you, and not in a mean way, but I'll never follow you, and I'll never DM you. So someone's asking me, hey, was that you that just DM'd me? That was not me. So I'll never sell you or try and ask for anything. So anyway, here's my main portfolio. Or actually not my main portfolio anymore, because this portfolio overtook it. It grew so much. But yeah, this is our dividend only account where every stock in here pays a dividend, and every stock in here is also in the S&P 500. Hey, yeah, watch out for that guy in chat there. See, we'll have to block him. But yeah, if we look at our total percent change, luckily we are up on every single stock except for Carlisle down here. But yeah, Google has been on an absolute monster. Same with Constellation Energy. This is your main nuclear play. CEG legit owns 30% plus of all the US's nuclear reactors. Meta's a good one right now too. It's worth buying. Like if you have the intention to never sell, like Meta's worth buying even right now. I also have a small Roth IRA. We started our Roth IRA pretty much a year ago, and it's all over the place. We got way too many stocks in here. I plan to sell off some stuff and consolidate it. But yeah, these are all the stocks that we own in here. Can't wait to buy more Iron Mountain, one of my favorite REITs. We actually just bought, I just made a YouTube video. Literally yesterday, I made the YouTube video. I go full details why I bought Bull stock and why I love Iron Mountain. If you like a higher yielding play, a 3.3% dividend. I normally don't touch these kind of names, but 3.3% dividend. It's a REIT, data center REIT, super growthy. Then we have our Moomoo accounts, known as our buy never sell portfolio, because once I buy a stock in here, I legit try and never sell it. You know, Amazon has been doing great. A lot of stocks you probably never heard of before, like Comfort Systems, Powell, Coca-Cola. Dude, really quick update on this stock. I've never seen this happen before ever. They just bought back, you ready? Like, it's not going to sound real, but this is real. They bought back 22% of all the shares on Friday. Or they bought back 22% of all the shares from the Coca-Cola company in a private thing. So the Coca-Cola company is the largest shareholder of the Coca-Cola bottling company, Coca-Cola Consolidated, and they bought back all the shares from them from a regulatory thing because they didn't want the Coca-Cola was on the board of directors on Coca-Cola Consolidated, and they wanted it to not look as biased. Anywho, I got to go right now. I'm actually late, so hope you guys have. Oh, I forgot to go over Weeble. Yo, check out my YouTube channel for the Weeble portfolio update. This is our risk on portfolio. We've done great in here. I got to go. We'll be live in 6 hours exactly. See you super soon. Have a great rest of your Sunday. Thanks again. Hey, see you, Brian. Hey, shout out to all the members. Looney, Brian, Lucas, Michael, Josh, Dale, Zoe, Princess. Thank you all for being here. Beatish, thank you all. We'll be live in 6 hours. And oh, wait, if you're still here, please hit the like button before you go. If you haven't hit the like button already, it still really helps out the stream.